right now, right? Everybody is talking about that. Is that the concern? I don't think it's something to be concerned about, but you're absolutely going to be hearing people talking about that. The reason we don't think it's necessarily a concern is because you are continuing to see GDP numbers.
My wages have not gone up with the prices.
3% year over year, which really negates the whole stagnant part of stagflation.
Oh God, these young college kids. I can't take any much more of her. She's feeding you full of bull crap. See, I got fed up with her the other day too. Her analysis. Well, MICC, I haven't traded that one in a while. Hillary. GCC. I'm going to do a pot video. We got time? Think so. See what Becky Click's wearing today.
And operating margins, details straight ahead. Plus, cannabis-related stocks are soaring after the DOJ took a first step towards easing nationwide restrictions on marijuana. It's May Day, Wednesday, May 1st, 2024, and Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times
She's wearing
Square.
green.
I'm Becky Quick along with Joe Kernan and Andrew Ross
Nope.
Sorkin.
She's wearing blue.
Let's take a look at U.S.
Blue,
equity
green,
futures.
teal.
Joe was just mentioning yesterday's drama in the markets. You're not seeing any rebound this morning.
Well, hell no.
To get it off another 85 points.
You're overbought, hon.
Down by 22. The NASDAQ down by 120. And of course, that comes after a sell-off for stocks
Well, I'd like to
yesterday,
party with her
down
one
now
night.
by 570 points, or 1.5%. The S&P was also off by 1.5%, and the NASDAQ was down by 2%. Then you take a look at Treasury yields, and again, this tells you a little bit about the expectations for what is to come next from the Fed. No signs of relief with the 10-year still at 4.69, the 2-year above 5%. We saw it jump above 5% yesterday morning on that economic data that hit at 8:30 that was hotter than had been anticipated. Price of Bitcoin coming down pretty substantially, off by about 4.5%, as Joe mentioned, just holding 57,000. And then gold prices were down by 2.3% yesterday. They've been hitting new highs this morning, sitting just above $2,300 an ounce. And then you have crude oil prices with the continued concerns in the Middle East at this point, down by almost 2% as well. Maybe that leads to questions about what the global demand is. $80.39 a barrel.
Meantime, new overnight, police officers clearing protesters from Columbia's Hamilton Hall, which had been seized.
Clearing Democrats.
Dozens of pro-Palestinian protesters were arrested. Columbia's president has asked the NYPD to maintain a presence now on campus through at least
Insurrection.
May 17th to prevent further encampments or occupations. I don't know if you're watching any of the live coverage of it last night, but it was extraordinary just to watch the police.
It was not extraordinary, it was stupid.
Taking these kids out, protesters on all ends of it. I mean, it was it's unbelievable, and obviously it's
Unbelievable.
spreading across the country.
Happened a little earlier in Florida. Didn't seem quite as jarring for some reason. They did a little earlier. What I didn't realize was Hamilton Hall was the same building in the 60s.
Mm-hmm.
Same building that these protesters.
They're doing that intentionally.
Yeah, I'm sure. Well, the DNC's in the same city.
1968, Chicago.
In Chicago. And from the Biden administration this morning, approving $6.1 billion in student debt cancellation for 317,000 borrowers
God.
attended the Art Institutes. The Department of Education investigation found that the Art Institute.
Okay. So you go for a degree in art, and they're getting bailed out of their student loans. Who in the hell would go to a school for art to get a job? And then we have to pay for it? This administration is something else. I mean, God, I'd hate to be a Democrat these days. Sleazy bastards. Logan Paul's husband is pregnant. Oh, this guy's funny. I love this guy. Logan Paul is pregnant. That deserves a share. Well, hello, retail traders. This is Washboardjim with a sneaky snake trading strategy, and you know what's cooking? Cannabis. So, we've got some real good news on this sector, and I think it is a catalyst to make us run a little bit higher. The Biden administration plans to reclassify marijuana, easing restrictions nationwide. which I think is a great thing, but also I kind of, as we've gone through this process, I think it has hurt the black market, the underground, the dealers, but they've moved on to different things like fentanyl and crack and cocaine, and because I participate every once in a while in cannabis, and it's so convenient just to go to a store, buy it, take it home, and have your thing instead of having to try to look around and go through trouble, maybe get arrested, ruin your life. To me, it's better than alcohol. I can't stand drunks. I don't like being around them. I usually end up hurting somebody or cussing somebody out because they push, like drunks. I just can't deal with their attitude. And there's people that get high that just never can get it, that don't deserve to get high, that ruin their lives. But I think if you're responsible, you don't do it while you're driving, and you don't push it on people, especially kids or anybody that's never been around it. Let them figure it out for themselves. But it's definitely going to be a thing that'll change the world. You'll see a lot more pop-ups. The next thing probably come out they're going to work on will be the banks. So if that happens, you're going to see an expansion. You're going to see bars having smoke rooms. You're going to be having places where you can go in and smoke the stuff and buy it at the same time. And you're going to be all kinds of. You can be able to grow your own at home. So yeah, it's going to start a new wave, and I think it'll be a big catalyst to get maybe back. I've been trading this from day one when the IPOs broke out. That was back in 2010. We're in 2000. It's 14 years later. It's been wonderful to watch, but it's also been just been wonderful to watch, and it's opened a lot of doors for a lot of people. So let's go ahead and go to the watch list. I'll probably put this link down in the bottom. So I got me a little watch list prepared here. I cleaned it up yesterday, and we're going to talk about the ones that are popping right out of the gate today. And the first one that we're going to talk about is going to be IMCC. Now, I like to set my Fibonacci's from the point of break. So let's I wish I could get that bigger. Let's go to a 5-minute. So we had the breakout right here. So all these trades, I'm going to be putting the Fibonacci. I got the wrong chart up. I got the wrong chart up. So we're going to set the Fibonacci's on these stocks on the 5-minute, 2-day 5-minute. IMCC. Take your Fibonacci tool, run it all the way down to the bottom. Now, we pulled right back to the 68.8. Now this thing can drop back down to the 50 or to 38.2 and be a strong buy. Put you an alert right here on this previous break. And that's where you want to go ahead and maybe take the trade if it pulls back. So you do that to every one of them. We'll go to the next one, and you'll try to play within this channel of support. Tilray, same thing. I set the Fibonacci's yesterday at this 100% line. We never did pull back. This is a monster. I'm going to reset this Fibonacci again. So somewhere back here between the 68, if this thing decides to pull back, if it breaks the 100% extension here, we'll move it on up. I think I got 253. Now check this out. I got this already charted out. So we got 253, and we hit that yesterday, and then we've got the 302 for the next resistance. CGC, back to the 2-minute, 2-day, 5-minute. Set the Fibonacci's up the same way. Now I did set this up. I've had this set up here, the extension. See how we extended on this Fibby? Now we've got a 1, 2, 3 up here, which is a resistance level. We break that, we'll go higher. If not, we might want to pull this thing back. But CGC had a real good run yesterday. Now if you want to, reset the Fibonacci's again or keep what I got on here. That next resistance is right around 1650. Support, again, you know, off the 200 SMA, and that'll be a more than a 50% pullback. This one here looks exciting. CGC, sundial, CNBC pumps this crap. Let's go ahead and go with the top here on the Fibby setup. So somewhere down here on the bottom of this channel, they all look good. They all look very good. MSOS, I'm going to set an alert right here off the 200. I'll be watching them all today. VFF ETF, or I thought it was Village Farm International. Anytime he's pulled back to the 200, but you want to do that on the 1 minute too. See how it bounces off the 200 on the 1 minute time frame? That's probably the way I'll be trading these today. HITI, I don't know about that. Cron, I used to trade the crap out of Cron. You do a Fibonacci on it too, and look for that 68 or 38% pullback or the 50. MJ is another ETF. This one is a good one. Oh man, we're broke 90-day yesterday. This is a pretty good stock. We had broke the triple top yesterday. This is a whole year. See, this news is huge. It opens the path to a lot of doors. GRWG is another one of my top picks. I think this thing can get to easily to 405 this week or during this run and break that double top resistance at $5. I really like this stock a lot, GRWG. And then we've got a new one that I added to my watch list yesterday that's under $1. A week ago it had restrictions put on it, or going to if it doesn't get up there to $1 and break that. So we could be looking into a reverse split, or it can just be a sister play to what's going on. Now we do have a gap, and it has to break this gap. So that's your hard resistance, is the gap. I should have thought about that the other day. Well, a guy asked me about this trade, and I'm going to bring that to him, and I'm going to show him gap. And that becomes a hard resistance. If you can break that gap, man, she'll take off. But, I mean, there's a reason why it's down. And we haven't had, last month, we have had some volume. So, I don't know, this thing can probably get up there and break that 5. I'm going to type that in here. Gap resistance to break. So that's it. Put it in black here. gap resistance to break. And that's it. Retail traders. This is the sneaky snake trading strategy. This is going to be a big catalyst for the cannabis industry. So I'd be keeping a good eye, create you a good watch list, and play them dips. Have a great day, retail traders. Dang, man. What's the deal here?
simple. Bank with SoFi to earn a higher APY and an epic welcome.
What's going on? Huh. Oh. Well, hello, retail traders. This is Washboardjim with a sneaky trading strategy. You know what's cooking? Cannabis. So, we've got some real good news. Now, what's going on here? Well, this is the strangest thing I've ever seen. Details. How'd I jump all the way up there? I don't know. I don't think it was meant to be. How'd he get all the way up there? Huh. No, screw it. Gone. It's strange. No, got time to do it again. Well, oh, what'd I do? La 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 la. I'm still alive. La 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 la. Let's try this again. I'll make it short and sweet. Hello, retail traders. This is the Sneaky Snake trading strategy, and this is my second take on this video. My first one kind of flubbed up. Sneaky Snake, where I talk about chart patterns, moving averages, and being in the now. Well, yesterday the Biden administration, U.S. is poised to ease restrictions on marijuana in historical shift, but it will remain controlled substance, which means, you know, the criminal aspect of it might be a little bit less harmful for you. It can be a big catalyst to make this sector run some, and then it could open some doors to a lot of other opportunities. So we're going to go ahead and go through a watch list that I have right here of my favorite cannabis tickers, and we'll start off with IMCC. Cureleaf's up here too. I like Cureleaf. God, look at Cureleaf yesterday. Cureleaf, they all had a good run. This one hit the 200. We're so way undersold. Then that big gap up yesterday. So I'm gonna kind of illustrate on how to trade these, and then you can go through your own tickers of the way I would do it on a breakout, sector breakout like this, especially if you kind of have a little bit of bullishness behind it. So let's just use Cureleaf for a good example. So I pull it up to the 1 day, 1 minute time frame, or let's pull it up to the 2 day, 5 minute time frame. And we started this breakout just the other day. So I'm going to take my Fibonacci setup, which is right here, Fibonacci retracement. And I'm going to go to the top, or go to the very bottom down here. And I'm going to run it all the way up to the top. And that's going to give me my pullbacks that I need to take this trade on. So if we do not, this is a pattern. So if we do not break the double top, we could easily pull back. Now I always say look for the first trend, which is right here. And the other double top is right here that it had to break off that bodies of them candles. So if, as long as we stay above 620, we're bullish. We drop down into this ascending triangle and still be bullish. But once we hit the 38%, that's probably your solid support to hold. Then each one of these will represent a support. A lot of these stocks that break out, I'm not talking about this sector right now because this catalyst can make stocks run more. But when you get an initial breakout on a stock, many times I'll wait for that 50% pullback. Then I'll see if it respects that and then take the trade. But the news has to be noteworthy. And in this case, it's very noteworthy. So, and it's also a sector that is kind of iffy, if you know what I mean. Little iffy. But still, yeah, everything else is all overbought. So this could be a good spot for people to play in and have some fun while the other sectors start to run down a little bit. So again, set your Fibonacci setup from the beginning of the breakout to the top. And then remember that 38, 50, and 68% pullback, or 62% pullback, and try to play within that channel. Meantime, looking for patterns and things of places of support. And I think that'll be a great catalyst for you to create a watch list. Now I've left this watch list up here long enough to where you could copy some of these down and create you a watch list, or create you one on your own. But the watch list is so easy to get to, it's so easy to manage, and then you're able to take trades. You know, you might find one in here that's red tomorrow that you really like, that you're going to have an automatic bounce up to the upside. So I wish everybody a great day in this sector. About the only good thing Biden has done is push this legislation through a little bit more. Don't forget that it's just not Democrats that smoke weed. So right now you got a bunch of bribery going on with student loans. I just heard the Art Institute is getting a major break. All the students there are going to get a free ride. Who would go to college for a frickin' art degree? Unless it was in business, like I did. Okay, well that's it. And then then we got to pay it for their stupidity. I was a picture framer for 18 years. I've seen a lot of nuts. Then I've seen a lot of good people come in. So we'll have a great day, everybody. This is the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being a now. And you know what? I'd have been a perfect citizen for New York City. I'd have been a Golden Glove. I'd have cleaned up the Bronx. Y'all have a good day. Let's see if we get it right this time.
And the Treasury Department has announced the new composite rate on I-bonds is now 4.28%. That includes a fixed rate of 1.3% and an annualized inflation rate of 2.98%. The benefits of the low-risk investments are that federal taxes are deferred as long as you hold the bond. They're exempt from state and local taxes as well. In comparison, federal insured high-yield savings accounts also offer a safe place for your cash, and you can find rates of 4.5% right now. Plus, you can withdraw your money at any time. So if you rush to get the 9.62% rate on I-bonds at their peak in May of 2022, the fixed rate was 0. And when combined with the current inflation rate, those bonds are now earning less than 1/3 of what they did back then. So what should you do now?
I would sell them now because the fixed rate on that May 2022 I-bond is 0%. So you'll only be making in the next 6 months an annualized rate of 2.98%. You're not going to get that 4.28%.
Now, that may be a consideration for short-term savers, but other financial advisors say the I-bond's fixed rate of 1.3% may be attractive to some long-term investors. And you can read a lot more
I wouldn't
about
invest in
I-bonds
this
at
company if it was the last thing I did on it.
Sharon, thank you very much.
Sure.
Screw you
Coming
people.
up, we are going to talk about the race for the White House with Axios' Jim Vandehei. He's got a new book out. That is next.
Oh, it's already got 13.
NBC.com.
Welcome back to Squawk Box. Our next guest is Jim Vandehei. He's co-founder of two media companies, first Politico and now Axios, where he is the CEO. He has written a new book. It's out this week and it's titled Just the Good Stuff. And we're going to talk about the book. There's about a whole number of lessons about life that you've learned that you're trying to pass on. I want to ask you about some of those things, but I want to ask you a little bit about DC for a second, some of the things you've been writing about in Axios. In particular, this Time magazine interview that Trump just gave.
U.S. poised to ease restrictions on marijuana, historical shift.
Or the sentence or two or three that you said yourself, that is something we're supposed to focus on.
Well, one, we have two candidates who are basically operating like they're in the witness protection program in terms of like getting really tough scrutiny around like what are you going to actually do when you govern. And for Trump, this was like a really detailed conversation where he said the quiet part out loud. I think what people are not paying attention to in the noise is he has like very substantial plans for governance. And it's a lot different than what we're used to. It's different than his first term. We've done a lot of reporting on it. The Times has done a lot of reporting on it. But it's the first time he's talked about, hey, listen, I'm going to use the military. I'm going to use the National Guard to quell protest or to deport people who are here illegally. I'm going to potentially get rid of people in the Justice Department if they don't agree with me. Very significantly, we've known from his staff and from on the outside that they want to get rid of potentially tens of thousands of civil servants who they feel just weren't loyal enough to him last time. On the outside, you have the Heritage Foundation and others putting together a lot of work to make sure that that functions that way. And if you look back at that first term, he was really hamstrung by the fact that a lot of people weren't loyal to him and didn't actually want to carry out his wishes. So if he has a government that will carry out his wishes, he's going to be able to do a hell of a lot more than he did in his first term. You might like that, you might loathe that.
I love it.
At least be aware of it.
He was hamstrung by a lot of things in his first term. I mean, what was Crossfire Hurricane? That was before he even won. They had a plan to disrupt, and I don't know, just there were obstacles from day one for everything.
Including from him, right? Like he appointed a lot of people.
That's the new information.
And that's what he wants to do. And in that interview, he's pretty candid. You know, it's hard when he interviews because he's all over the place, but he's pretty candid about these things that they really would stretch norms, traditions, and kind of accepted law. And again, a lot of Republicans like that. That's great, but now it's at least detailed.
I think the impact will be on business leaders that you talk to about those type of things?
I think there's a real divide, as you've seen on your own show. I think on the one hand, people feel like, listen, I'm probably going to get lower taxation, maybe better regulation, but the trade-off is there's probably a lot more volatility and unpredictability. I don't think business is that thrilled with what they've seen from Biden. I don't think they like the amount of spending that we've seen, the threats to
exactly
the capital gains rates.
Well, this is killing CNBC.
Divide. There's a reason that President Biden's sending Treasury Secretary Yellen out to Arizona today for the Treasury Secretary to worry about, to warn about the attacks on democracy, because they feel like that, not the issues, is what would get him reelected. Biden I'm talking about. They feel like for whatever reason, people don't like what he's selling in terms of the policies that he's had, and they really want to make it kind of, hey, here's some stability versus like a real attack on democracy.
Policies that nobody likes?
Pardon?
Instead of just altering the policies that nobody likes, let's just talk about something else.
Yeah, for what I mean, again, if you just look at what he promised to do, he did a lot policy-wise. It just turns out the public doesn't like it, and you've seen it in the unfavorable ratings, which have been consistent and persistent since the day that he took office. So he has to figure out something. What is it
that you think, from all the reporting that Axios has done, that the public doesn't like? Is it the policies? Is it the age issue? Is it the inflation? Of the economy? What is it that when you say they don't like the policies?
Yeah.
What do you think that? What do you think specifically?
Yeah, I think you're probably.
Gosh.
It's hard to know because we're talking about 330 million people, but I think it's a combination of people are very uncomfortable with his age, right? He looks old. He often sounds old, and then you look at polls where even Democrats are really concerned about it. So they hate this topic, but it is true. He is old, and he would be 86 at the end of his term. I think you put that, you couple that with inflation, and then some bit of nostalgia. Like people look back at Trump and they're like, I didn't like, he might have said crazy things, but I don't know, it seemed like my taxes were lower and I was making more money. Then in some cases that's right, some cases it's not. But when you look at poll after poll after poll that says people feel that there was more success in the economy under Trump than under Biden, you can see why the White House gets worried and says, okay, then we have to figure out a different juxtaposition. We have to say stability versus crazy. And that's kind of what they're trying to say over and over and over.
Right.
That's why you have the Treasury Secretary like wading into democracy politics. It's just not, you don't typically do that, and the White House is admitting you don't typically do
If the way your weekly budget is measuring up to what you make is still below where it was when he took office, and inflation comes down to 3%, on top of the 20% or whatever number you want to use, depending on what you're talking about, and your wage gains have not kept pace with inflation, you feel strapped. You don't feel better off than you did 3 years ago.
And so take your thing. So where is Biden losing support? Put aside young people because they don't really vote. They're really worried about black men and Hispanic men, especially working class black men and Hispanic men. They've been moving to the Republican Party over the last 4 years, and that's who's getting hit hardest are people, working class people, by inflation. So then, therefore, you can extrapolate inflation probably is a bigger deal than even we realize.
I want to talk about this book because there's a whole bunch of things in here that I'm fascinated by, but I'm curious, and they're life lessons that you're trying to teach. One of them, though, is this. You say, study thyself, be clear-eyed about your gifts and flaws.
Yep.
It's the only path to betterment.
Yep.
How many people do you know who are not that introspective, who have no idea what their gifts and their flaws really are? And to the extent that you can tell those people how to figure it out, what do you tell them?
I mean, most don't. I mean, that big part of it. So the book was written, I started a couple of media companies, Politico and Axios, and I was a reporter, as you know, before that. So I took a lot of notes. And like one of the things in just realizing who has success and not is that one question. Like, are you doing any introspection? What are you good at? What aren't you good at? How do you spend your day? What type of people do you surround yourself with? What do you do when you work with a jerk? Do you let them in your life? Do you keep them in your life? How do you deal with someone when you have to fire them? There's a way to do it with grace. There's a way to do it and be a real jerk. And a lot of this stuff, I make fun of myself a lot in the book because I had to learn to be a CEO. And in learning to be a CEO, in the beginning, hiring, firing, strategic decisions, communicating, culture, I screwed it all up. But then I do a lot of introspection, and I'm like, okay, I screwed that up. How do I fix it? And in fixing it, I looked at other people who had success. So in many ways, the book is me being a vessel in terms of like, here, listen, if you're a manager and you want to be a better manager, here's a bunch of tricks and tips that are very actionable. If you're a CEO and you want to deal with a younger generation, here's some things that will help you. And if you're a college graduate and you're trying to figure out how do you get ahead and not be a jerk, I think there's a lot in the book that would be really helpful.
For the audience, the CEO crowd, many of whom are watching, they all complain about trying to deal with younger people in their office. What is the single trick you give them?
Stop rolling your eyes and stop whining about it. Like, it is what it is. Most of your workforce
God, I like this guy.
is be under the age of 40. They're not motivated by what we were motivated by. We got into the workforce and we wanted a paycheck and we didn't want our boss to hit us. They want purpose. They want meaning. Well, then you have to give them at least some purpose and meaning. In everything, every job, there is purpose and meaning. Either a company does something well, they treat their employees well. Emphasize the hell out of that, and you will get just as good a productivity as you got from us. But if you resist it and you pretend we don't live in a diverse country, if you pretend that they're not motivated by different factors, you're only going to suffer. There's so many things that I see CEOs talk about that to me strike me as totally delusional. It's like, yeah, I'm going to make everyone come back 5 days a week, and damn it, they will. Really? You're trying to get the most talented people who've decided to move to Austin and San Jose and other cities, and you're just going to say, I'm not going to compete for that talent because I have to have everybody in the office every single day? Strikes me as crazy because we don't have that big of a workforce, especially in the professional class.
I'm going to send you to lunch with Jamie Dimon. The book is called Just the Good Stuff. Thank you very, very much for coming in this morning. Congratulations on the book. It's nice to see you. And Mike Allen, who is your partner in crime, joined you off stage this morning. Thanks. Thank you.
When we come back, billionaire investor John Paul DeJoria is behind big consumer brands like Paul Mitchell Hair Products and Patron Tequila. He will join us next on his new AI venture.
earnings just in from Pfizer. There's another one. Actually, Andrew, if you want to look at something that's not really looking too good to shareholders, what is that, 40? And now we're about almost 20, 26.
Well, people like that news, at least today, on a relative basis.
We'll see.
Everything else.
It's up 88 cents. Drug maker reporting adjusted profit of 82 cents a share, well above the consensus estimate of 52 cents. You know what I think we should do? I think we should actually, when it's not adjusted, I think we should say the reporting profit that's not adjusted. Because it's every single time it's adjusted.
We're not talking Pfizer, it's every
right, it doesn't add anything to it. Revenue also came in above Wall Street forecasts. Results were helped by cost cuts and strong growth in RSV vaccine sales, and their comps are getting easier at Pfizer. The real trouble came after they spent, did they not go into weight loss and instead just stuck with the vaccines and the therapeutics for COVID? Coming up, billionaire investor John Paul DeJoria joins us next on his new AI venture. Squawk Box will be right back.
Retail traders, this is the sneaky snake trading strategy, and okay.
Welcome back, everybody. Retail returns have surged since the pandemic, and the items often end up staying on the shelves or ending up in a landfill. Joining us right now to talk about his new venture into AI that tries to tackle that problem is John Paul DeJoria. He's the founder of Patron and co-founder of John Paul Mitchell Systems. Got a lot of other things he's been working on too. But JP, thank you for coming in. And it's really interesting what you're working on right now. Talk about this problem.
You bet. It's my pleasure. No one even knew it existed. About 8 years ago, I invested in a company called Renew Logics, where they would take electronics or put in warehouses. You can't just dump them in a landfill. It's very, very bad.
Well, why not?
And then disassemble take out the parts that were valuable, and in an ecological way get rid of the remains. So
Really?
companies love this. Well, a few years ago, Gary Stevens,
Oh.
who is in that company heading it up, came up
This is
with a
interesting.
brilliant idea of what the industry needs, and it's a big industry.
Yeah.
It's a way to go from B to B, where, for example, a retailer gets returns, but better yet, a manufacturer has overruns or more things they just want to sell out. We have an AI that we put together, our platform, where it goes directly from, for example, the manufacturer to the end user, to the other B, or it's the little places that buy it, opposed to having to go from the company to another group to another group.
Oh, what a pain in the ass.
Direct. It's a new way of distribution.
How does it figure that out?
We figured out, it took us many years and cost me a few $1 million to do, but we had to know who the end user is, which we knew through Renew Logics, and that's to be the little companies that buy it. So we already have all of that down.
I remember returns being a massive problem in the catalog industry 25 years ago. It'd be 15 to 25% of everything that was purchased would get shipped back. How
I love
does
you,
that
Becky.
rate out with online purchases?
See you later, baby.
Today, it's about 1 in 6 that are returned.
No.
Okay, so what happens is this: when
You
that
look like
happens,
George Carlin.
whoever has it loses money. One of the bigger companies loses hundreds of millions of dollars a year in return goods. They get it, they have to
Gosh,
sell it to this
what a
warehouse,
pain
who
in
sells
the
to that
ass.
warehouse, who sells it to the other users here, who finally gets it to the public. I didn't realize this, but this business that we're talking about right now,
Yeah?
about 4 years ago, was over 300 billion a year.
Oh my gosh.
You're 800 billion a year. This next 12 months, it'll be over $1 trillion. That is bigger.
In 2
than the
months?
cosmetic industry and the alcohol business put together. So we have a way of making it efficient, a way to
Wow.
make it ecological so there isn't waste, and it takes something that was a loss for a company, all of a sudden give them profit.
Who are your target clients? The Amazons of the world, the Walmarts? I would think that they would develop their own.
It's actually everybody, but no one has that same AI. They have it to go to various places. We're the only one that connects it all together right now. And the ones you're talking about right now, more than half of who you just mentioned are already with our people instigating our program.
So who are you working with, Walmart or Amazon? Because I only mentioned two.
There's others too. Okay, there's others too.
But you're talking about a big market, and this is
Yeah,
rolling
we're
out
working with them right now. Yeah, very, very big market. In fact, just one of the clients that came to us has this problem with $8 billion a year, and they made us their exclusive person to help them move it out.
Okay. That's fascinating. You are also sitting here with some alcohol in front of you.
Yeah.
And we
Drunk.
know that you are Patron. That was your brand.
That's
You
true.
sold it. It's been 5 years.
Yes, it has. Actually, a little over 5 years. Bacardi, a wonderful company. When they bought Patron, at that same time, I developed another tequila. But this other tequila that I co-founded with somebody
Drunk.
was not a Patron product, totally different. So it's the next generation. Well, they were kind enough, since it wasn't on the market yet, to let me give it to my daughters for $10, basically, and then not touch it or put any money into it for a period of 5 years. My non-compete was up this last year. It's Bandero. It's 100% what you might call pure. 0 additives in it whatsoever. It's made the old-fashioned way. It's one of the smoothest tequilas ever made. And recycled glass. Even the leather on here, which looks like leather, feels like leather, smells like leather, even the leather is not real leather. We found a way to make leather so it looks and feels like it, but it isn't. And this is our tequila, and of course our Bandero, and this Bandero is our coffee one, where it's this tequila, not just regular tequila, but this tequila with coffee in it. So we call this.
No,
our
I like that.
Bandero Cafe.
I like that a lot.
We're just releasing that. We're only in 7
I've
states.
never heard of tequila and coffee before.
I know, yeah, it is.
Oh, yeah.
They used to make it with coffee in it.
Yeah, we do.
Absolutely.
Not a big
Yeah,
tequila.
this is
I
different.
mean,
Yeah, this is different than
it's
Patron's
made
photo.
for the Squawk audience. Like right
That's now I'm starting to like the guy.
Coffee.
You're correct.
Come
Or
on.
people putting their coffee in.
I made a batch of beer, a Porter Wagner, a silver dollar porter, and I put coffee in it. And I entered it in a contest and took first place. I was really surprised. It was a great tasting porter. I mean, it was the best one I ever made. I made 1,500 gallons of beer.
Thank you, John Paul DeJoria.
I was going to open up my own little bar, and I decided not to do it and have a brewery. but it's just the legality of it just got to me. I couldn't handle it. There's too many idiots out there.
Debt cancellation for 317,000.
I didn't want to get sued right and left.
The Art Institute's eligible borrowers
We'll catch you later.
Debt discharged without taking further action. And a big IPO set to sail down Wall Street today. Viking Holdings pricing shares at $24 at the high end of the expected
Make sure I
range.
got this turned up
Cruise
loud
operator
enough.
raising $1.5 billion, making it the second largest U.S. IPO this year. Former President Trump raising his stake in the parent company of his Truth Social app to nearly 65% in SEC filing, showing that Trump secured 36 million shares of Trump Media Technology Group through an earn-out bonus. Stock has surged more than 50% just in the past week, but still down more than 25% in total from its peak at the end of March.
Futures this morning, even after yesterday's steep declines for the markets, 1.5% losses for both the Dow and the S&P 500, 2% loss for the NASDAQ. You are not seeing any rebound this morning. Dow futures are off just about triple digits right now. The NASDAQ down by 105, and the S&P is down by about 21. Let's get over to Contessa Brewer. She's got a look at some of this morning's pre-market movers. Contessa, what are you seeing?
Becky, CVS shares plummeting this morning. In just the last half hour, of course, it reported earnings and revenue that missed expectations, and it slashed guidance for the full year. And look at those shares now, down by nearly 12% in the free market. The company got hit by its investment in expanding its Medicare Advantage plans at a time when medical costs are rising. CEO Karen Lynch calls it, in the earnings release, a near-term challenge, and says CVS Health has a plan to deal with it. Super Micro shares also down sharply in the pre-market, down by 12%. Revenue miss in the third quarter. Despite the recent move, of course, there's a lot to like about the stock. If you look at that performance over the past year, the company boosted its current quarter revenue guidance and said it expects AI demand to remain strong for many quarters. Over 1 year, up 618%. And Amazon shares in the green in the wake of yesterday's earnings report. The company beat on the top and the bottom lines and posted a 24% growth in ad revenue in the quarter. Cost-cutting measures over the past few years, including layoffs, have helped Amazon stabilize spending, contributed to a record high operating margin for the quarter. Those shares up 2% in the pre-market, and over the last year up 75%, Becky.
Contessa, thank you very much. We'll check in with you just a little bit later. Investors are bracing for another busy day of earnings. They're also looking ahead to that Fed rate decision that comes as well this week. Joining us right now is Sylvia Jablonski. She's the CEO and CIO at Defiance ETFs. And Sylvia, I was thinking as we headed into this week that really it was the earnings that were going to be all important, but based on the data that we got yesterday, that Fed decision is starting to loom a lot larger.
Yeah, good morning, Becky. I would agree with that. I think that there's a lot of uncertainty and nervousness in the market in terms of what the Fed is going to say today about the future path of rate cuts. You know, now the market's pricing in basically one cut around November. And, you know, as we know, we came into this expecting a lot more than that. I think 3 was the lowest number we had, you know, the first couple months into the year. So if the Fed turns out to be hawkish again and you know, talks about potentially no rate cuts or even rate hikes, then, you know, we're going to have a lot of potential pullback in the markets. I don't expect that to happen, though. If anything, I think he'll kind of level off and keep a neutral tone today.
The bigger issue, though, is what's causing the Fed to feel that way. If inflation is actually much more persistent and stronger than anybody had been guessing, that's the type of thing that causes lots of panic and the potential for people to say, this is not the year we thought we were going to get.
Yeah, and if you look at the data, you know, CPI was a little bit too hot, jobs were a little bit too hot, manufacturing came in well. And, you know, that's certainly worrisome for the Fed. And so, you know, I think there are a few data points that are going to come in through the rest of the year, which will really lead them to their decision in terms of whether to cut or not. You know, it really has been a couple of blips, though. Inflation has been downward trending, and we really need a few more months, I think, to suss that out and see if that's really the case. But to your point, if we don't see that happening and we continue to get hotter reads, you know, particularly with geopolitics in the background and oil prices and things like this, then we might be holding at this level for a little bit longer, and that might put some pressure on stocks.
What's your decision right now, at least? What do you see happening over the rest of the year? Is this a time to sit pat? Is this a time to go ahead and buy in while the other people look a little nervous?
Yeah, I'm always a buyer when people are nervous. You know, 2022 was a big AI gathering year for me. And I think this year I'm thinking about what's the next AI, and that's going to come in the form of quantum computing. So all of these Mag 7 stocks that are reporting, well, I shouldn't say all of them, but the Microsoft, Google's, Amazon yesterday, they're winning on the AI trade. They're showing some momentum there, and then on top of that, they're going to be part of this new quantum computing innovation. And so when markets pull back, 10-year goes too high, you get pullbacks on these tech stocks, and I just consistently dollar cost average into these stocks over time and hold on to them forever. So that's my plan. This last month was a good asset gathering month in that sense. And then diversification, right? I mean, you look at these weight loss drugs, healthcare pays nice dividends. They're seeing nice revenues, Eli Lilly, things like this. It's always good to have some diversifiers in your portfolio as well.
Sylvia, thank you.
Thank you.
All right, coming up, the CEO of MongoDB joins us. With a company update, thoughts on the AI revolution, plus a street reaction to Pfizer and CVS results. Those stocks right now are headed in the opposite direction. CVS quite a bit of opposite there, almost 12%. We'll be right back.
The trial.
Maxie. A group of newspapers, including the Chicago Tribune and the New York Daily News, is suing Microsoft and OpenAI. The papers accuse the tech companies of illegally using reporters' work in millions of copyrighted articles to create their generative AI products, including OpenAI's ChatGPT and Microsoft's Copilot.
And MongoDB is announcing the launch of its new AI applications program. This initiative bringing together major players in the AI industry to assist other companies in integrating generative AI into their applications. They're not alone. Increasingly, companies are partnering with AI technology to enhance their business. Amazon recently announced the publicly availability of their AI-powered assistant called Q. And joining us right now is Dave Picheria. He's MongoDB's president and CEO. Good morning to you. It's nice to see you.
Great to be here. Thank you.
So we were just talking off camera about the different models. This is about, in some ways, integrating with various models. Right now, how do you stack rank the various models out there and what's happening?
Well, right now, I would say Facebook has really come out with a very impressive version with Llama 3. The performance benchmarks seem quite impressive. It's open source. And moreover, they've basically committed to investing somewhere between $35 to $40 billion a year to continue to innovate and build new models. And so they're working on a higher performance model. So it's kind of...
There is a view that this could completely and utterly undermine all of these paid closed models, which is to say, if Llama 3 is as close as people are saying to whatever you think, ChatGPT 4 looks like today, or Claude 3 looks like, or Amazon working on Olympus or Gemini, then what?
Well, I think this is the problem customers have, is they're feeling overwhelmed. It seems like every week there's a new advancement. A couple of weeks ago, Mistral came out with their very low cost but high performing model. Before that, Anthropic. And then there's rumors that GPT-5 is around the corner, so everyone's waiting for what's going to come. And so the whole point of this program is to address customers feeling overwhelmed by essentially doing three things: coming out with a reference architecture for particular use cases, built-in integrations to reduce integration risk, and technical expertise to help customers really get started quickly. And we have all the hyperscalers as partners. We have Anthropic, Cohere, and a bunch of cutting-edge tech companies focused on orchestration services, as well as fine-tuning services to really fine-tune models for particular use cases.
We had talked to an analyst earlier about Amazon. Do you think that all of these things become commoditized ultimately?
Well, there's some talk that the foundational model space is one of the most quickly depreciating assets out there, given all the money being spent on previous generations, and all of a sudden now you have these new models that are so far superior, no one's maybe even using even Llama 2 or GPT-2, etc. So I think that what we're seeing, though, is that typically when a new technology comes out, value accrues at the bottom layer first, right? You're seeing NVIDIA post amazing numbers. Right. OpenAI has been the most talked about company since they introduced ChatGPT 18 months ago. But what we're seeing customers saying is that, when do I get the value? Where do I get the return? And the return will be coming through the applications that are built on top of that infrastructure. Right. And so we're now starting to see the build out those applications, either consumer apps or now enterprises.
Okay, which raises a whole other question. There's a lot of startups out there, and even large enterprise companies that are thinking about building apps on top of these large language models. Right? But there's a separate question, which is to say, is it likely that when we get the next version of these large language models, that they effectively are going to be able to do what these apps do already? Meaning you're going to be able to build your own app, meaning there's no real moat. If we get to that, I'm not even talking about getting to sort of AGI. I'm just saying at some point you might say to yourself, what are the paths I should or should not go down? Because if I look at my watch, there's going to be a new version of whatever it is, and it's going to be able to do this by itself.
Well, I think there's clearly a trend where we'll go to what people call agentic workflows, where agents can now take actions on behalf of the end user and be able to do things autonomously. But I think we're a little bit ways out. And so, again, people do need to build apps, and they do need to figure out how to, for example, enrich customer experiences, how to essentially drive more cost out of the business, and to find new ways to drive growth.
So what's a cool example of some apps that you think have some great value today?
Let me give you an example. We have an automotive company who's built an app that listens to the noise of your car. So if you have a problem with your car, right, you can record the noise in your car and essentially get quick diagnosis of what the potential problem is, because they have this repository of all the potential issues your car may be having.
That's cool.
So that's an example of using AI very intelligently to deliver better customer experience.
For EV.
And so that's one example. We have other customers who are essentially using AI to figure out how to look at health reports and be able to provide better diagnosis for patients, so that they don't have to spend all this time trying to figure out what's wrong with them. And then we have 2 banks who are using our technology to radically reduce the time and cost of migrating off legacy platforms that are old, brittle, and expensive to new modern platforms. That's Bendigo Bank and Adelaide Bank in Australia, who are actually working with us to do this. So people are quite motivated to do this, but it's still very, very early days.
In those instances, they're training off of the data from these enterprises, these individual enterprises. They're not just using the large language model to figure this out.
Well, there's a bunch of use cases. There's customer support use cases where you can automate the interaction of service support. There's automation use cases, and then there's what people call enterprise RAG. And so enterprise RAG, or retrieval augmented generation, is you're marrying private data with the public data and reasoning of the models, right? So in that case of that automotive company, they have the private data of what all those noises sound like and what are the potential issues, but they can marry that private data with the public data to generate incredible value. And you're going to see a lot more enterprise RAG use cases being deployed because data is the new gold, and people want to use their data for a compelling advantage.
Dave, thank you for coming in this morning.
Great to be here. Thank you.
It's still to come. CVS shares plunging this morning after profit and revenue both missed expectations. We're going to talk to an analyst out with a new note on the company this morning. And then bipartisan legislation to create a federally sanctioned anti-Semitism monitor for select college campuses. We're going to hear from both representatives who have created that bill. Squawk Box coming right back.
Time now for today's Aflac Trivia question. What European capital is known as the City of Light? The answer when Squawk Box returns. Jim's Club. And now the answer to today's Aflac Trivia question. What European capital is known as the City of Light? The answer, Paris.
All
right, welcome back, everybody. There is a lot of news in the healthcare sector this morning. Pfizer beating expectations for earnings on the top and the bottom lines, but CVS Health missing estimates, the company cutting its full-year guidance. Plus, we've got some news from J&J. Joining us right now is Jared Holtz. He is Mizuho Securities Healthcare Equity Strategist. And boy, Jared, you got a lot of ground to cover this morning. A very busy sector. What do you want to start with?
Becky, hey, thanks for having me. I don't really know. I mean, I think the totality of the Johnson & Johnson update, Pfizer earnings, the CVS guide down, there's a ton to start with. I guess we can just start with CVS right off the bat. This is probably...
Stock's down sharply.
Yeah, that's the biggest guide down for a large cap name in healthcare we've seen during this earnings period so far. And they cut earnings by almost 15%. A lot of moving parts here. I think the biggest issue, it's just very reminiscent of what we've seen in managed care over the past couple of quarters, where we're getting much higher utilization trends, and that's leading to earnings misses for, a lot of the companies. And CVS, the Aetna division, I think, responsible for a lot of this damage, but the pharmacy and retail pharma in general, also just not a great place to be. We've seen what's happened to Rite Aid and Walgreens too.
I heard from Karen Lynch, the CEO, this morning, and she talks about how they got caught off guard by the Medicare Advantage trends on top of the elevated baseline, but their visibility was really hurt by that cyber attack at Change Healthcare. How much of it do you think is that cyber attack? How long do you think it takes them to get back on track with all of this?
It's tough to assess the Change Healthcare situation. I mean, a lot of that has to do with, accounting and just getting the numbers right from a reconciliation standpoint when you're looking at patients coming in and getting paid for certain things. I mean, CVS is a little bit of a different situation because you've got, on one hand, they're a retail pharma company, on the other hand, they're a managed care company. So I think there are positives and negatives that you could probably derive from the Change situation. But yeah, in terms of visibility on utilization and getting caught off guard with more of these Medicare patients using the system or having some sort of, healthcare procedure done, it's been very difficult for any of the companies to forecast how strong trends were going to be. And we've seen a couple companies get caught off guard for sure.
Okay, Pfizer, decent reaction there to their earnings. I think the stock's up by just over 2%. Yeah, about 2.2% right now. Your takeaway?
Yeah, it's fine. I think at the end of the day, no major changes to my thesis, or I think the street's thesis on the stock. It's more value oriented. It's trading kind of 12, 13 times numbers, which I feel like is kind of fair. They gave you a couple positives, a couple negatives this quarter. A lot of the beat was driven by COVID revenue, which is probably going to go away. There's a one-time item in earnings. I think most of the earnings, the guidance update they gave, or the guidance increase, is based on a reconciling item of about 10 cents, so that gets you there. All in all, I think, a lot of moving parts. I think the street wants to see a lot of these deals get integrated and performance getting better. But for now, it's a cost-cutting exercise in part. And then the dividend yield, I think, is intriguing at 6%, but with rates at 5%, tough to get too excited about it.
Okay, finally, let's talk Johnson & Johnson. They have a plan out today to try and deal with the talc litigation, the last of the ovarian cancer. They've got a proposal to put back almost $6.5 billion, $6.475 billion to try and deal with that. They want to put it directly to the claimants, run around some of the trial lawyers who I think have slowed things down. Still to be shown if they can do that, but if they can get 75% of the claimants to vote off on that, they think that this is going to resolve some major issues. What's your thought on this plan as it's proposed?
Yeah, totally agree. I mean, this would be a huge win for J&J if they can get this thing done and settled at that amount. I mean, it's been by far the biggest overhang on the stock. Tough to, discuss the company or the stock at all without bringing this issue up for at least a couple of years now. So it would be great if it goes away. Yeah, they're going to go out to the plaintiffs. If they get 75% of the vote, hopefully they can settle this thing at not a massive cost, and they're going to be able to pay it down over years. And so I feel like it's affordable. I think the street has been talking about a number even bigger. So if they can get this thing done for under $7 billion, I think it would be a huge deal for the stock. Obviously nothing done today, but if they can make some progress here, it'd be very significant.
What do you do with any of these stocks today? J&J, CVS, Pfizer?
not much. You know, like J&J to me is probably the most intriguing of them all. If they, you know, the talc situation goes away, you know, there's a lot of value to be unlocked, even though, you know, they are, you know, faced with drug pricing, some patent losses, etc. On the pharma side. I think they've done a very good job in med tech, and I think they have a lot of dry powder to do deals on the pharma and biotech side should they see fit. So if this can go away, and I know they're trying to make a lot of progress here, and if this is kind of like all settled, I think J&J is the most interesting long of the three.
Jared, thanks a lot. I know you have a busy day, but thank you for hashing this all out with us.
Thanks so much. I appreciate it.
Still to come this morning, a new bill to battle anti-Semitism on campus making its way through Congress. Squawk Box will be right back.
Welcome back to Squawk Box this morning. Police officers clearing protesters from Columbia's Hamilton Hall, which had been seized and occupied the night before. About 40 to 50 pro-Palestinian protesters at that building arrested, bringing the total number of arrests at Columbia to 230. Columbia's president has asked the NYPD to maintain a presence on campus through at least May 17th now to try to prevent further encampments or occupations. Fascinating article in the Wall Street Journal this morning about the president of Columbia and some of her supporters and some of her detractors, and the leadership questions about just how they've gotten to this point and whether she's going to be able to maintain her job ultimately.
And a bipartisan House duo have proposed legislation to create a federally sanctioned third-party anti-Semitism monitor, a monitor for select college campuses that are federally funded. Here with the details, the co-authors of the legislation, Democrat Congressman Richie Torres and Republican Congressman Mike Lawler both represent the state of New York. Let's start with Congressman Lawler, or either one, whoever feels more strongly. How many different methods or legislation did you gentlemen kick around before deciding on this strategy? Because I don't know what we need to do, to be honest, Congressman Lawler.
Well, I think this requires a multi-pronged approach. Today, we're actually going to be voting on a bill that I introduced last year, along with Congressman Torres and Gottheimer and Moskowitz, that would require the Department of Education to adopt the IRA working definition of anti-Semitism for all of its Title VI discrimination enforcement cases under the Civil Rights Act. But that's just one piece of legislation. Obviously, the bill that Congressman Torres introduced and that I'm co-leading, the Columbia Act, is another vehicle by which to really ensure that these institutions are cracking down on anti-Semitism on campuses all across this country by allowing the department to install a third-party monitor to make sure that they are adhering to the Civil Rights Act and enforcing Title VI.
And Congressman Torres, your comments?
Yeah, so Title VI prohibits discrimination, harassment, and intimidation against all students, including Jewish students, and the purpose of the monitorship is to enforce the law. The status quo is fundamentally failing Jewish students on college campuses, as evidenced by the madness that took hold on Columbia University. And if we do the same thing over and over again and expect a different result, that's the definition of insanity. So we need a new model of enforcement in which there will be a federal monitor on site who can see the facts on the grounds with his own eyes and then report whether a particular university is in compliance with the law.
Congressman Torres, in your view, is the issue nuanced at all? I'm talking about between expressions of free speech and the right to protest, which is so uniquely American, and that's what I hear again and again. I always hear the caveats that, we're unhappy with what's happening, but certainly and I heard the Biden administration say it yesterday, his press secretary, that we even urge protests and demonstrations at commencement exercises, if that's what you want to do. So it's a weird line, or fine line to try to walk.
Look, I agree with you, except there's a difference between free expression and intimidation. There's a difference between free expression and harassment. And what we're witnessing in places like Columbia University is the creation of a hostile environment for Jews on college campus in violation of Title VI. And keep in mind, there is no First Amendment right to blockade entrances. There's no First Amendment right to vandalize property. There's no First Amendment right to hold people hostage and harass and intimidate Jews. Those are not activities protected by the First Amendment. Those are crimes, punishable by law.
We've seen this many times in the past, Congressman Torres, and where I was going with this, and there is a piece, lead editor in the Wall Street Journal, America's New Mob Rule, and pointing, things happen gradually and then all at once, obviously, but there is some finger pointing by the opinion writers at the Journal. The left increasingly resorts to fomenting disorder to get its way. They go back to the Occupy Wall Street movement. They even go so far as to say that post-George Floyd, that the left used that murder to trigger and then condone riots in numerous cities. Do you think that that's part of the problem here, or not? Do you think there's any blame to be ascribed to progressive politics?
Look, I mean, extremism is not an exclusively left-wing phenomenon. There's extremism both on the far right and on the far left. And we have an obligation to condemn extremism, no matter what form it takes and no matter what ideological direction from which it comes. So I've been consistent in speaking out against both the far left and the far right.
Congressman Torres, what do you think about the professors at Columbia who are engaged in this activity, which may very well be different? You may put them in a different category than the students. You think they should go?
Look, I mean, if you have either a professor or a student who's violating university policy or breaking the law, I mean, there should be accountability. There should be consequences, of course. And I'm concerned that our college campuses are indoctrinating the next generation of Americans with not only a hatred for Israel, but also a hatred for their own country.
Right.
And I'm not aware of a civilization in human history that has succeeded on the strength of self-loathing.
Right. That's a good point.
But does that mean these professors need to be fired, the ones that are engaged in this? And
look, I think what we need is decisive leadership. I mean, if the president had made it crystal clear that if you fail to vacate the encampment, you're going to face expulsion, or you're going to face a revocation of your visa, or you're going to face firing, when you have a credible threat of accountability and follow through on those threats, then this situation could have been resolved decisively. But once there's a crisis of confidence in the leader of the university, then chaos ensues. But I'll defer to Mike.
Yeah.
Look, when you look at this situation at Columbia, I went there last week. I met with President Shafiq, and she said it was a mistake to call in the cops at the initial encampment, and that they were trying to negotiate. And I, along with my colleague Anthony D'Esposito and Speaker Johnson, made it clear to her that you cannot negotiate here. You need to act decisively, and you need to make it very clear that this is unacceptable. In 1969, Father Hesburgh, the president of Notre Dame, sent a letter to both faculty and students and made it clear that, yes, you have a right to protest. Yes, you have a right to offer your opinion and oppose decisions made by the government. However, the moment those protests turn violent, either physically or verbally, you lose that right. And that they would have 15 minutes to cease and desist or face suspension, expulsion, and or arrest. And I think President Shafiq failed in her obligation to ensure the safety and well-being of all students, but in particular Jewish students who were under attack and threat and afraid to come onto campus, and allowed this situation to get out of control. You have to act decisively, as my colleague just said. You cannot be weak-kneed in these moments, and unfortunately, that's what we've seen on many of these campuses across America, which is why it is so critical to enforce the law and why Congress is taking steps to do that.
How about Northwestern's President Michael Scho, who just cut a deal with the protesters and said that they're going to be doing more scholarships as a result?
Look, from my vantage point, negotiating with pro-Hamas agitators is absolutely absurd. You have a bunch of people who have embraced an ideology and a viewpoint that supports the beheading of innocent women, children, and babies. This is not a free speech issue. These are, by the way, these are private institutions, Columbia. There's no negotiation to be had, and I think the failure of leadership here on the administrative level is what is allowing this to persist.
It's a longer, as Andrew always says, that it is a longer conversation, but I've been around a long time. You don't, when you use force, and I'm trying to figure out, is Florida got the right idea, Congressman, or is sometimes that can make things worse. But this is the first example I can think of where there's an entire group of people whose safety and personal rights are being violated, and I think that makes the use of, I don't know about overwhelming force, but Congressman Waller, that's what you're calling for, I think, here. In previous demonstrations, we don't want to get to a Kent State, or you saw what happened when that, back in the 60s. But in this case, I think it's fundamentally different, is it not?
Look, whether it is the storming of the Capitol behind us, whether it's sieging a Portland courthouse, whether it is burning down a police station in Minneapolis, or whether it is taking hold of the grounds of Columbia University, it's unacceptable. It is unacceptable behavior. You have the right to protest. You have the right to voice your opposition to policy decisions that are being made. But the moment that these protests turn violent in any form or fashion, law enforcement absolutely must be part of the solution. I'm sorry. You cannot allow this to blow out of proportion like we saw at Columbia University.
And if I can add, suppose,
Go ahead, Congressman.
Suppose there were students establishing a KKK encampment or a neo-Nazi encampment. I can assure you no one would be defending their First Amendment rights. Everyone would be calling for the end of the encampment. And so my only point in mentioning this is that the invocation of the First Amendment tends to be selective, and it's become a pretext for turning a blind eye to anti-Semitism.
Right, and you think about, you know, college kids blowing off steam. Some of them are 35 years old and they, you know, cut their teeth at the WTO protests. I think it's all, doesn't even matter what they're protesting. I think they're just there. They're just in love with the agitation. Congressman Richie Torres, thank you. Congressman Mike Lawyer, thanks. Squawk Box will be right back.
Saturday.
Coming up, countdown to today's data. We'll be getting the ADP report on jobs at 8:15 Eastern time, so that's just half an hour away. And later, former Federal Reserve Board Governor Dan Tarullo will join us to talk about the Fed's rate path, inflation, and what it means for the markets. Up next, though, the DOJ's antitrust case against Google. We will hear from the president's former antitrust advisor on what to expect. We'll be right back.
of the trial.
All right, welcome back, everybody. Closing arguments for the Department of Justice antitrust case against Google are expected this week. It's one of two separate antitrust lawsuits that the tech giant is facing this year, one on search and one on Google's advertising business. Joining us to talk about this and much more with the TikTok ban that's proposed as well is Tim Wu. He's Columbia Law School professor and former advisor to President Biden on tech and competition policy. And Tim, I'd actually like to start with what's happening with TikTok. You wrote an op-ed that lays this out. You're in favor of this proposed sale or ban.
Yeah, I think that China has a track record on internet freedom, which is totally disqualifying for letting them control one of the world's most important social media networks with incredible surveillance potential and also potential for collecting information.
Your thought on this is not that it's necessarily a national security risk right now, but that no matter what happens down the road, you don't want them here?
I think it actually is a bit of a national security risk, although that's not clearly proven. I just think China has violated so many internet norms that in a sense, part of what the U.S. is doing is saying, China, you don't get equal treatment in our markets. I have more of a trade angle on this. It's almost like, listen, you ban all of our apps, you take whatever data you want from us. That behavior does not merit the same treatment as other countries.
And you put them more in the category of Russia and Iran?
Yeah, exactly. Yeah, Cuba. A few other countries that just do not obey any of the basic principles. When I was in government, we worked on this thing where we had a declaration for the future of the internet. It's like, here are the basic principles that law-abiding countries should follow. China violates almost every one of them. And I think like that just merits different kind of market access.
And so you hope this goes through? You think it will?
I mean, the law's already passed.
It's already passed,
yeah.
But then what happens down the road?
The challenge, I mean,
the litigation is coming from the company.
Litigation is, I think, company will lose that litigation. Then the challenge is really for your viewers is figuring out how to do this kind of deal where you can divest a pretty complicated asset. So, but
you think it's possible?
You know, I'm not an expert on.
No, but you do propose some different ways of going about this. You say Google, Meta, and Oracle could have the money, but you think there are third-party options.
I don't think it's a good idea. You know, I'm still an antitrust guy to give it. You know, give TikTok to Facebook would be a disaster because then you create this monopoly. I think you know, someone's got to get creative, and maybe a very wealthy individual, something like that, and maybe could shake stuff up. Maybe TikTok can. You know, introducing competition.
But do you think that without the algorithm, that anyone can actually really do this competitively? Because what I imagine happening is the Chinese say, look, we're either not going to sell the whole thing at all, or we're going to sell it to you with the user data. You can have the users, you can have the name in the United States. You can't have the algorithm. You have to develop your own algorithm.
Yeah.
Well, if you have to develop your own algorithm, in the time it's going to take you to develop an algorithm that's even anything within the vicinity of what TikTok is like today, that your friends at Facebook or Meta and your friends at some of the other places will have taken such large market share that it'll be diminished anyway.
Yeah, I think we don't know. Let me say two things about it. First of all, if TikTok actually has to do everything China says, they're not independent in the way they keep saying they are. So I want to say one thing. If they say, oh, China won't let us sell, this whole argument that they're actually independent from China isn't true.
Can I ask you a separate question when you say that?
Yeah.
And I just want to push back.
Yeah.
There have been a number of instances where the United States has said that we cannot either buy assets from China or sell assets to China.
Right.
Okay? Would you therefore say that those businesses in the United States are not independent?
We haven't, well...
I mean, that somehow the government controls everything. I mean, that is, I'm just saying, it's in the same vicinity.
No, I hear what you're saying. I think it depends. The ones we sell, they can't sell are usually highly specific national security secrets. I don't think TikTok algorithm is anything like that. And TikTok is also, or the rumors have been, China won't let them sell at all. You know, we don't say you can't sell this subsidiary. We say you can't sell this highly, or export this particular national security technology. I think it's a big difference. So I'll put that out there. On your original, now I've forgotten your original question.
Just the question being would a Meta or a Snap or you name somebody else would take so much market share while, you know, somebody else has to build their own
I think it's a competitive market. I think TikTok has a huge user base. I don't, you know, people say, oh, the algorithm. I mean, I don't know. I feel these things have become more commodified. It might be special. I can't imagine TikTok is valueless without its algorithm. That's what I would say. You know.
171 million users.
I mean, it'll be worth less money. But I also think we just, coming back to the main line, we cannot have this essentially propaganda unit run by and controlled by a country which has violated every internet norms. We need to stand up for ourselves, stop playing the suckers, let China ban every single one of our apps and being like, you know, oh yes, come in and do whatever you want here. And it's also terrible for children. I'll add that on top of everything.
I'm with you on that. Okay, let's talk very quickly about this Google antitrust case. Give us what to expect, what we should be watching.
You know, I think the word on the street, at least obviously my friends are mostly enforcement people, think Google's going to lose the case. The question is starting to be remedies. You know, I don't know that for sure. There's a lot. I think it's very important that the remedy be forward-looking. If they come out of this case and just say, hey, Google, stop paying Apple, you know, $20 billion a year, that'll be a favor to Google. I think they need to think not about, okay, looking backwards, search engine competition is basically over. You know, the question is what's next and what opens these markets.
They're going to play the music and they're going to say we have to go, but you work at Columbia.
Yes.
So I have to ask you, and you don't have to answer, but what do you think of what's happening on your campus?
It's been incredibly intense for everybody. I'm glad they got the people out of the building, say that much.
Thank you, Tim. Tim Wu.
Coming up, the November election, that is coming up, is approaching. There's a lot at stake for investors while Wall Street is worrying about it, and the worry is growing months in advance. That's next. We'll be right back.
CNBC.
Welcome back to Squawk Box. As November approaches, investors getting nervous that the election could affect markets. Are they? Well, we'll see. Joining us right now is Kunjin Banerjee. She's the lead writer for Markets Live at the Wall Street Journal. Do you really believe that folks are getting nervous about the election and that's what's leading to all this volatility?
Right now, maybe it's not leading to this volatility, but what I have been hearing from financial advisors, people on Wall Street, strategists, is that this comes up at every single meeting that they're taking with clients. What's going to happen in the election? How will it impact individuals' portfolios? And we actually are seeing this in the market already. We're seeing people hedge for volatility in the October, November timeframe. That's around that election.
So it's very interesting. If you look back at history, right prior to the election, actually, there's not always been crazy volatility because there's always an expectation that people seem to think that they know what's going on. It's usually in the summer months where you have some of that. What are you seeing?
Right, and I think the data does show that things tend to be volatile ahead of the election. Once that uncertainty passes, major indexes typically rally. One investor said to me, vote with your vote, don't vote with the trade, because there isn't too much of a difference in terms of long-term performance for the S&P 500.
Is this time different insofar as we know what the current president's policies are and the way he would manage, and we know what the former president's policies are and maybe the way that he would manage?
So the Wall Street Journal recently reported that Trump allies are looking for ways to potentially have the president influence interest rate policy, play more of a role in how the central bank operates. That didn't happen last time Trump was president. So
Kind of did. He was talking constantly. Yeah,
it did. He was tweeting about Powell. Yeah.
Real estate, I need low rates, blah, blah, blah. Yeah.
Right, and we do know what these two candidates' policies look like, but they have such different views on everything from immigration to the economy, taxes. Taxes. That's the number one thing.
Taxes and tariffs. Those are the two things I mean, that capital gains proposal would never happen, but, and also, really unrealized gains, and that'll never happen.
Well, that's on one side of the thing, and then you got tariffs on the other, and how inflationary is that going to be?
I know. Tariffs are that's not a conservative tenet, usually, the ramp up in tariffs. I don't know what.
It's not. And Andrew, you're asking about volatility. We're already seeing election-related volatility. Think about Donald Trump's social media company. It's been swinging like a meme stock. Clean energy stocks rallied a lot before Biden's last election. Right. So you could see this volatility at the single stock level.
Okay, so you just mentioned Truth Social. What do you think is going on with that stock?
It's become a meme stock. I think it's become a proxy for how people are viewing Trump's polling, his candidacy, and I think we're going to continue to see intense volatility there heading into the election.
And do you see it as a mechanism to get him cash ahead of the election, as a sort of like fundraising mechanism?
For some investors, yes. That's what I've been hearing. Some investors are turning to that, thinking of this as a way to benefit Trump and to get him this kind of big cash windfall. And for a while, it seemed to work.
See, Gunjan, thank you.
Thank you.
It's weird. It's a 50% retracement of the sell-off again. I think we're back to 50 something. Unbelievable. Thank you. It's just after 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernor with Becky Quick and Andrew Ross Sorkin, and some of the big stories that we're watching. Among some of the big stories, Amazon shares moving higher, better than expected first quarter earnings and revenue. The company seeing growth in the critical advertising market and cloud computing areas. President Biden announcing an additional $6 billion in student loan debt relief. It's meant to help more than 300,000 people who took classes at the for-profit system of schools known as the Art Institutes. And we're just a few minutes away from April ADP employment numbers. The expectation for an addition of 183,000 private sector jobs last month. We'll bring you that data when it hits at 8:15 Eastern Time.
Ahead of those numbers, we are still seeing some red arrows this morning. Right now, Dow futures off by about 80 points. S&P futures down by 22, the NASDAQ down by 110. Treasury yields have been elevated from where we were at this point yesterday. 10-year right now is at 4.67, the 2-year is at 5.02, and let's get right over to Contessa Brewer. She's got a look at some of the morning's big market movers. Contessa?
Becky, good morning. CVS shares are plummeting this morning, and earlier today it reported earnings and revenue that missed expectations. Look at the shares are down almost 12%. It slashed guidance for the full year. Look, this is a company that has really been working to expand Medicare Advantage plans, turn it into a true healthcare company from its history and its legacy as a big drugstore chain. The CEO, Karen Lynch, called it in the earnings release a near-term challenge and says CVS Health has a plan to deal with this. Pfizer's having more success after reporting this morning with revenues that came in ahead of estimates. The company also hiked its full-year profit outlook. The pharmaceutical giant said new profit guidance accounts for its confidence in its business and its ability to slash costs. Those shares are up just 1% in the pre-market. Finally, we look to Starbucks continuing to struggle after reporting earnings yesterday. The coffee chain missed estimates on the top and the bottom line. It slashed its forecast for fiscal 2024, predicting that its cafes would keep underperforming for several more quarters. You saw store traffic and sales down in the quarter as the company tries to adjust to what the CEO calls a highly challenged environment, and those shares are off by almost 13% in the early trade. Joe?
All right, Contessa, thanks. The Fed's two-day policy meeting concludes today. For more on that, in the recent corporate borrowing spree, let's bring in Megan Draper. She is global co-head of debt capital markets at Barclays, and I guess once again we're going to be listening very closely. Megan, what are your expectations? I can't imagine we hear, yeah, not today, but we're getting closer. We're getting closer. Would he ever say not today and we're not getting closer?
Yeah, I mean, I think Powell's in a bit of a bind. I mean, he's going to have to acknowledge that data has been disappointing in the press conference, and I think while he's likely to downplay the possibility of outright hikes, he's also going to have to manage to walk back some of his past comments about the extent of policy restrictiveness. And without a new dot plot on offer, I think his comments are likely to skew a bit more hawkish here this afternoon and lean towards this need for tighter financial conditions. So I think they dropped the "at some point this year" language that he referenced in the last meeting as it relates to sort of the dialing back of policy restraint.
We're not at 50-50 yet on hikes versus cuts, are we?
We're not. I think it's just about delaying the inevitable here, which is, in other words, if we don't see sustained declines in inflation over the coming months, we think the Fed is likely to push back to an initial cut at the earliest. I think that materializes is in September, but I think it's predicated on the basis that core PCE slows into the summer. So, I think we're just as likely to see that first cut slip to December, if there's even a slight hint that inflation has yet to subside.
Do you think inflation, A, is going to continue to come down? And B, why is it coming down? Because we're in restrictive area. You say, when you say inevitable that we eventually cut, I just don't understand why it's inevitable if we don't. Maybe we'll see something in the ADP numbers, but if the economy continues to stay strong and if inflation stays sticky, I just don't know why it's inevitable that the next move is down.
No, it's a great point. I think some of this ties to the Fed being loath to sort of risk losing credibility with the market at this late stage. I mean, I think equally there's a compelling case that higher for longer will in and of itself contribute to further tightening over time, and that should reduce the need for rate hikes. So I think sitting tight here for a prolonged period, even if that's into the turn of the year, is probably the right course of action. I think that they are going to want to avoid a scenario where they sit too long and then start to create cracks in the market. But I think they've already suggested that they've got time and can afford to wait and see and to gather more information before they make that determination.
What can you tell me about just the overall lending environment, corporate and bank and elsewhere? I would imagine rates are tracking the 10-year and the 2-year back up. At this point, the dollar is starting to wreak havoc around the world in other currencies. There's some dislocations that are occurring. Are any of them troubling or going to get out of hand?
I mean, for the time being, I think what you're seeing in credit markets is, in the face of this very material market repricing and higher interest rates, that credits remained surprisingly resilient. That is in large part tied and supported by underlying yields that are still near post-global financial crisis highs. So, investment grade, you can still clip 570 on the index there. In high yield, it's closer to 880. Even as spreads remain tight. And that feels, comfortable, I think, and an opportunistic entry point for a number of investors we're talking to, because the growth picture has created this incremental cushion, I think, for borrowers on both sides of the rating spectrum, so both IG and high yield.
Do you think, in the comments today from Jay Powell, you think there will be a noticeable shift in tone?
I think he has to. I think we saw a precursor to that in the Fed speak prior to their blackouts, pretty much across the board, and unwinding of what was sort of Powell, I think, getting a bit ahead of his skis at the last meeting. So yes, I think we're going to expect a more hawkish stance here, or less dovish stance, if you will, and that's consistent with the repricing we're seeing in the market with one cut now priced in ahead of year end. It was closer to 3 cuts priced in at the start of the month.
We got ADP coming. I wouldn't know which side of the trade to take right now. I don't. Do you have a notion? It's going to be really hot.
I think the bias is that rates are going to continue to trend higher. So our rate strategists are calling to be short 10-year notes heading into this meeting. They've been of that view for several weeks now.
Okay, Megan Draper, thank you. Barclays.
Thanks so
Coming
much.
up, private payroll data from ADP, the numbers and market reaction. We'll bring it to you all straight ahead, and then later. This one's interesting. The lawyer who filed a class action lawsuit on behalf of a Jewish student against Columbia University for failure to provide a safe educational environment for its students. He's going to be joining us to discuss the case and the situation on college campuses and the legal implications across the nation.
Marks.
Welcome back to Squawk Box. Breaking news, April ADP employment coming in with a gain, you ready for the number, 192,000 jobs, which is slightly hotter than the 183,000 the street expected, not by a huge amount, but the biggest sectors, leisure and hospitality, construction and education, also health services. Pay growth for those who stayed in their jobs in April was flat. 5% of those job changers, 9.3%. That's down from 10.1% last month for those switching gears in terms of their jobs. Joining us right now is Neil Richardson, Chief Economist of ADP. Good morning to you. Give us your highlight or your read through what this number really means.
It means that job creation in the first part of 2024 looks like a lot like it did in the first half of 2023. We saw the slowdown in hiring in the second half of 2023, and now it looks like hiring is picking up. The 3-month average is stronger than the previous 6 months. So the snapshot here is hiring is still strong, and wages are not falling as fast as they were. The wage growth is not falling as fast as it was earlier in our 6-month outlook.
Okay, so if Jay Powell is watching you now, you would tell him what and what to think about all of this?
Well, I think I'd tell him what he already knows, which is tread carefully. Because what we're seeing, even if you look at that job changers pay growth that you just cited, it ticked down a little bit from last month and went from 10% to 9.3%, but that's not the trough. It was actually lower early in the year. It bottomed out at 7.6% in February, and we look at this index very carefully because it's the most sensitive to real-time labor market conditions. So the fact that we're seeing a little more strong growth in pay growth for people switching jobs and still pretty high job openings means that wages are not playing along with a 2% target yet. They're still higher than that 2% target would allow for. And so as we look at what the labor market's saying, it's saying to the Fed, we are a smoking ember and we could ignite and watch wages. Wage growth is still strong.
And we could ignite, meaning ignite even further?
Yeah, that was what was interesting to me in the last couple of months. We've seen some steady declines in pay growth over the last 6 to 8 months. But in March, something different happened. We actually saw pay growth rise. And even though it's come down from that March level, it's still stronger than we've noticed over the past 6 months. And so I'm really watching pay growth. That pay growth is concentrated at the bottom quartile of the pay distribution. That's an important note because it means a lot in terms of consumer spending. And I think it sets the tone for the rest of the year in terms of not only inflation, but also GDP growth.
You know, we talk about AI all the time. AI coming to take our jobs, technology coming to take our jobs. Therefore, you would argue higher productivity longer term. Is any of that playing out in reality when you look at numbers like this?
No, it's hard to see it in real time right now, but it is playing out, and I think it's going to be a longer term play. Look, productivity is the answer to all the economic woes that we see. It's the answer to the inflation because you can produce more output with less input over time. And it's the answer to wage growth. It's how to keep wages rising and outpacing inflation. So these new technologies have the capacity to increase productivity, and that is good, but it depends on how they are deployed. And I think companies are still in the early stages of figuring that out.
Okay. Neil, I want to thank you for joining us this morning with the numbers.
Thanks for having me.
United Health Group CEO Andrew Whitty is set to appear before 2 congressional committees today, one from the House, one from the Senate. He'll answer questions about the hack of United Health, that own unit called Change Healthcare. It's America's largest payment management system for healthcare providers. And ahead of that, we want to bring in Washington State Congresswoman Kathy McMorris Rogers. She chairs the House Energy and Commerce Committee. United Health CEO will go before one of that committee's subcommittees this afternoon. What do we expect to hear, Congresswoman?
This is an important oversight committee hearing of the Energy and Commerce Committee. We expect to get a comprehensive report from Mr. Whitty from United Health as to what happened why millions of Americans have had their personal health information made available on the dark web, what they're doing to fix this problem, and then also what we must do, what United Health must do, and what action we must take to ensure that this never happens again. United Health is very large, has millions of families and taxpayers pay billions of dollars to United Health in premiums, and we need to make sure that their personal health information is protected from these kind of attacks, cybersecurity attacks that we see.
There's been so many times when we hear about hacks, we hear about personal information. Do we ever follow follow the money to see what actually happens down the road? What do we expect is going to be done with the information that was collected? Do we know whether there's been any indications it's being used in a manner to profit whoever came up with this whole idea?
Well, that's also a very good question, because United Health decided to pay the ransom. We're going to ask questions as to why they decided to pay the ransom in this case, because we know that when you pay the ransom, that only incentivizes more of the harmful behavior by those that are perpetrating these kind of cyber attacks. The committee, we have been spending a lot of time. We've had numerous hearings around cybersecurity. Just 2 weeks we had a hearing on cybersecurity and how, as it relates to healthcare, and what steps we need to be taking to protect personal, in this case, sensitive health information that is on the web and has been made available on the dark web in this case, which is very potentially harmful to millions of Americans. This is a very serious issue, and that's part of the purpose of the hearing today.
There's plenty of companies that offer services to try to prevent or make this much more difficult. You would think that in the private sector that it would be in the best interest of companies to it might cost a little bit more, margins might be hit, but you would expect them to do this on their own, or do you think that Congress needs to get involved?
Well, this hearing is part of us getting answers. We need to better understand what happened, why it happened, and then we will look at what steps we need to be taking. Certainly cybersecurity, whether it's in healthcare or other sectors, is top of mind for Americans as we see more and more of our information online. The committee is working on protecting American privacy rights online. We've also worked on lower cost, more transparency to give Americans, give individuals more ownership over their data, but also to understand what the prices are, because in this case, United has become very large, and the individual unfortunately doesn't always have a lot of power and control in this. So I believe it's very important that we get legislation that's going to get cost, understand what the prices are. We have United as a very large health insurance company that maybe doesn't want to pay the prices, owning the doctors that are providing the care, and that can be problematic.
As far as ransomware attacks year over year, do you know what the percentages are on it sounds like we're talking about earnings being up or down a certain percent, but is it increasing very quickly, and is there anything that the federal government can do to try to tackle that head on?
Well, what I do know is that there's a lot of consolidation, that United is becoming larger and larger. They now pay between 40 and 50% of the healthcare claims in America. And this consolidation, we know, only leads to less choices and higher costs for patients, for individuals. So that's where we have, as we've looked at the consolidation, we've passed the legislation with overwhelming support, lower costs, more transparency, to address this consolidation, to provide more competition in the marketplace, which ultimately brings down costs and gives consumers more choices. And we're working with the Senate to get them to take action on this, because we're overall concerned about just these larger and larger healthcare systems.
Very good. Congresswoman, we appreciate your time this morning. And what time does the hearing start?
It's going to be this afternoon at 1:30.
1:30. Writing that down. You look excited. That's very good. Thank you. Appreciate it.
Coming up on the other side of this, the latest Fed decision now just a few hours away. After a break, we're going to talk about what to expect with former Federal Reserve Governor Daniel Tarullo. I will tell you during the commercial break. Stay tuned. You're watching Squawk Box, and this is CN.
Welcome back to Squawk Box on CNBC. The futures after that ADP number, little changed. Still adding to yesterday's losses, though. 73 points now on the Dow. NASDAQ indicated down just under 80. A lot of Fed happenings today with the two-day meeting ending. We took a look at Treasuries. We're watching the entire yield curve. The 10-year now 466. The 2-year is above 5. We've been watching that kind of a key level, above 5%. And then cryptocurrencies, including Bitcoin, we saw it almost go under 57,000, then bounce back above 58,000. But just in the last week and a half, we have seen a move around 65,000. So it's been a big haircut for Bitcoin. As I mean, take your pick. There's been a risk-off trade in the equity markets, but the more unlikely it is for rate cuts this year, a lot of assets were counting on that, including Bitcoin. Some of the morning's key earnings movers, CVS and Pfizer. You can see moving in opposite directions. As CVS talked about rising medical costs to report disappointing results, and Pfizer's up 1.25%. That's the good news. Bad news is that it's 33 cents when you're a $25 stock. And Pfizer's had when we were talking COVID, talking pandemic, $45 with Albert Bourla. Remember, now down about 25, while Eli Lilly is almost $1 trillion.
Thank you.
Closing in on it.
Monjaro.
Yeah, thanks to Monjaro. And the other one.
Right, the other one.
Meantime, shares of Pinterest are sharply higher. Earnings of 20 cents per share beat estimates of 13 cents. Revenue also beat. Monthly active users coming in at $518 million, beating estimates of $505 million. Current quarter guidance now coming in above expectations. The stock up about 15% on the back of that news. And that is some good news after what has been a challenge for that company.
Let's get some breaking news right now from the Treasury Department. For that, we get over to Megan Casella. She joins us from Washington. Hi, Megan.
Hey, Becky, good morning. We have just gotten guidance for the next upcoming quarter, the Treasury's refunding announcement. Treasury is going to be auctioning $125 billion in securities in the upcoming quarter. That's exactly in line with expectations. They also confirmed they expect to be able to hold auction sizes steady for at least the next several quarters, which really should come as a relief to the Treasury market, which has been overwhelmed by supply. To break that down, they will be refunding around $108 billion and then raising around $17 billion in new cash. The breakdown in tenors is also expected to hold steady from last quarter, so that should come as no surprise as well. Two other details here to highlight in this release. Treasury is going to be launching its debt buyback program. This was expected to start today. They're going to be launching 9 rounds of operations between now and the next quarterly announcement. It's going to be starting on May 29th, and they're going to be buying up to $2 billion in securities each week. Now, the other announcement to highlight here is that Treasury is also going to be elevating its 6-week cash management bill to T-bill status. They've been talking about doing this for a little while. They say there was widespread support on the committee for doing it. And it's really, they say, because supply has been so elevated. They want to spread out on that curve the number of issuances and where the issuances are coming from. So it's just another sign, guys, of just how much supply is continuing to stay elevated to fund these federal deficits. Becky?
Yeah, Megan, that's been a concern. Some of the Treasury auctions recently that have been far bigger than expected, also raising concerns about the level of revenue that the Treasury is taking in.
Absolutely. They said that the reason they announced Monday that they are expecting to need to borrow about $41 billion more than they had previously expected. They said that was because of lower than expected tax receipts, which, if that's happening in a strong economy, there's some concerns there, right? We're close to full employment, and so if tax receipts are coming in lower than they thought, where is revenue going to come from, especially if the economy does start to falter just a little bit in the coming months?
Megan, thank you. We will add that into all of the things that we're kind of watching around the Treasury and what the Fed may do in reaction to some of these issues, too. Megan Casella. The Fed's 2-day policy meeting wraps up later today. The central bank is widely expected to hold rates steady because of persistent inflation pressures. For more on this, we want to bring in Dan Tarullo. He is a former Fed governor who led the central bank's reforms in the wake of the financial crisis, including the implementation of Dodd-Frank. He's now a Harvard law professor. And Dan, let's talk through what we're seeing. The data that we got yesterday suggested that inflation is going to be a hard beast to try and tamp back down. What do you think?
Well, Becky, it sure does look as though the old, almost cliched view that the last part of the battle is the hardest is what's happening here. There was pretty good experience, particularly through the second half of 2023, but that's obviously stalled out, and it's obviously been reflected in what Chair Powell has been saying over the last few weeks. And I anticipate it'll be reflected in what he says at 2:30 this afternoon.
Larry Summers, the former Treasury Secretary, tweeted out yesterday after the ECI and the housing price inflation figures that he's concerned rent prices could actually start to rise again. Those rent prices have been keeping inflation lower on the levels that the Fed's really watching. But he just worries that everything you're seeing at this point, there are bottlenecks that with higher interest rates and higher unit prices, rents at some point are going to reaccelerate too. Do you share that concern?
Probably not as much as Larry does, but I think, the housing market, Becky, has been really hard to track. It was easy to track, but hard to predict. And I think that's in part because of the cumulative impact of the pandemic and then the much higher interest rates. So when you have that kind of effect on the sales market, there's obviously a trickle down to the rental market. And we've seen, we saw pretty significant swings. So I do share some of Larry's concerns that you may begin to see a reacceleration, which is obviously not what the Fed and many others had been anticipating.
Right now, the Dow is indicated open down by about 56 points. We saw a change. All morning long, we've been looking at weaker futures. All three of the major averages pared some of their losses after the number we got from ADP at 8:15. Now, ADP was a little stronger than expected in terms of the jobs that were created, but the wage component didn't increase. It was at 5% for people who were changing jobs. Is that enough of good news to make people think, okay, this is better? I mean, we're trying to figure out what the expectations are from the Fed and how the market will react to that today.
Yeah, I can't imagine. I mean, for multiple reasons, I can't imagine the ADP print is going to have much of an impact on what the Fed does today, or even what Jay Powell says today, except perhaps in response to a question. You know, maybe it was regarded as a bit of an offset to the ECI report, which obviously was not so favorable. But I wouldn't put this is the classic case of not putting too much stock in one report. You know, Becky, I think essentially where the Fed is going to be at now is that they've got to continue to say they're data dependent, because that's what they've been saying now for the better part of a year and a half. And they've become a bit data captive, actually. And right now, with the recent three inflation reports, with the ECI report, I don't think they've got any choice but to sound either, I want to say, less dovish or more hawkish than they did not so long ago.
What do you think Jay Powell's message will be today? How pointed, or maybe how oblique?
Yeah, I think, again, I'm gonna refer back to what he said before the blackout period, which is where he seemed to be positioning the FOMC, was to say, look, we're in a place where we can stay higher for longer, if that's what the data tell us is needed, or if the labor market begins to weaken, we can react. So that suggests that that's going to be the principal message. And if you don't see too much change in the FOMC statement, and that's the kind of lead that Jay has in his introductory remarks, then I think that's basically where we can expect to be. That is, they're going to wait for better data. The thing that might happen, I don't expect it to, but the thing that might happen is that you're getting some pushback from some of the members of the FOMC who are a little bit more worried and would like to see a little bit of ramping up of the language in the FOMC statement. So that's the thing I'd be looking for. You know, we always say it's not what the FOMC statement says, it's what it says that's different from the last one.
Right, right. Nuance, looking for nuance everywhere. Professor Cirillo, thank you.
Looking for redlining, basically.
Redlining, yeah. Basically run it through the machine learning quickly. Show us the changes. Professor Cirillo, thank you.
Good thing, Becky.
Coming up, New York's Columbia University calling in the police finally to help clear protesters upset over Israel's military actions in Gaza. After a break, we're going to speak with an attorney who filed a class action lawsuit against the school, blasting it for allegedly becoming too dangerous for Jewish students. Squawk Box will be right back. Welcome back to Squawk Box. The futures right now have actually improved just a little bit on the Dow and the Nasdaq, but we're all waiting to hear, as we just heard in that last interview, what Jay Powell, what his body language looks like, what his tone is like, what he does say, what he leaves out. Here's Treasuries this morning. We are looking at levels that we've been here for a while. The 10-year is 467. But it's notable the 5-year feels pretty comfortable with the yield above 5, or the 2-year with the yield above 5%.
Meantime, New York police now clearing a building last night at Columbia University that protesters had taken over the night before, this coming weeks after students began gathering to call for Columbia to divest from companies connected to Israel. Roughly 100 people were arrested. New York Mayor Eric Adams spoke to Morning Joe in the last hour.
We want the schools across the city to be clear that the property of the schools are for the students. More than just Columbia, it's more than what we saw at City College. This needs to be a clarion call for our country. These are our children, and we can't allow them to be radicalized like children are being radicalized across the globe.
Earlier this week, a Jewish student filed a class action lawsuit against the school for allegedly failing to provide a safe learning environment. It's a fascinating lawsuit that could have much larger implications. Joining us right now is Jay Edelson, the lawyer for that student. We should mention we've also reached out to the law firm representing Columbia and have not yet heard back, but it's nice to see you this morning. This is effectively a breach of contract lawsuit, which is to say that students effectively pay to go to school, and you're saying they can't.
They can't, yeah, and I think I'm a lawyer, we always have to say allegedly, not in this case. They absolutely breached their contract. I don't even think Columbia is arguing otherwise. We've been talking to Columbia, we already did a court hearing yesterday, and they've agreed that they cannot maintain a safe environment. You've got kids who work their whole lives to get into one of the most prestigious universities in the world, and they can't go to class, and they're being forced off because they're Jewish. It's insane. This is America. That should not be happening.
And so you brought this case.
Yes.
You've gotten phone calls from all over the country. I imagine this is just going to be potentially the first of many lawsuits similar to this.
Well, we'll see. So, it's really interesting. You see universities dealing with it different ways, and I appreciate the mayor's comments. I think he's right. What we're going to see as this case develops and the facts come out, it's not just student protesters. It's really outside agitators. People who have much different agendas, who are not, what they're saying to the public is different than what they actually believe. So when you hear them talk and they say, we are calling for terrorist attacks on Jews, we're calling for terrorist attacks on America, that's not really coming from the students, that's coming from the outside forces. And that's what we're going to develop, and I think that's true in other universities.
When you say
as well.
develop, you're going to develop in discovery.
Yes.
As this lawsuit progresses.
This case is moving quickly. We have asked for immediate injunctive relief. The court has been terrific.
What does injunctive relief look like in this case?
Injunctive relief means restoring the campus to safety so that all students can actually learn. They're in the middle of finals, and you've got a system where certain students aren't able to even go and take in-person finals, and other ones, the radicalized ones, own the campus. Less so now. We're glad the police finally came in.
What do damages look like in a case like this?
This case is not about money. This case is about let's restore some sort of order. This is a case we're handling pro bono. We are working with Columbia, and our goal is just let's restore sanity to the world. Let's have the adults in the room, and let's let our students come in.
Where do you land on the idea of free speech, protests on university campuses, and the like, and where the red line is on everything else?
Love free speech. I think that there should be more debate about was their reaction to the October 7th terrorist attacks, was it proportional, was it not? What's Egypt doing? They border on Gaza, why aren't they letting people in? Should we divest from Israel? Great discussions. Part of especially an academic experience. What you can't do, though, is incite violence and actually engage in violence, and that's what we're seeing. We're seeing Jewish kids are being physically pushed off campus, and they're being told from leaders, especially at Columbia, that the goal is to actually kill Jews in America. That's not free speech.
When did Columbia's administration go wrong? What was their first misstep? How have they not corrected since then?
Great question. So let's compare it to other schools like University of Florida. University of Florida, the second there started to be violent protests and illegality, they start suspending kids. Columbia has equivocated. Every 2 days they've got a different view. It's, you know, here's our ultimatum, and then the ultimatum happens, and then they go backwards. So even now, we appreciate they finally called the police in, which they needed to do. They should have done it weeks ago. But the question is, are they going to hold strong, or are they going to give in to demands that they're going to give amnesty to some of these kids who are calling for violence on fellow students? So that's where they went wrong. You got to be strong, decisive, and clear. Otherwise, you're just really furthering this.
Do you think they are going to be called for amnesty? Is that the expectation you have, that they will say all these kids who they've suspended and expelled, forget it, you're allowed to come back in?
That's absolutely what the student groups are going to be asking for. And we saw Barnard College lifted all the suspensions right away. It sends the worst message. If we're very clear to the students on our campuses nationwide, you're allowed to. We want you to engage in free speech. You cannot threaten people, you cannot push people, you cannot attack people. If you do, you don't get to be at one of the best universities in the world.
Do you believe that Columbia's president should remain Columbia's president?
Yes. Yeah, we're not calling for the Columbia's president to resign. What we're asking is that Columbia's president does the right thing now.
What about the professors who are on the payroll of Columbia that have been engaged with these students as part of these protests?
Well, it depends. If they're engaged in free speech, then that's fine. But what we're hearing already is that a lot of professors are engaged in potentially retaliatory actions. You've got a lot of students that are worried that their grades are going to suffer. We heard from one person who was getting an A in a class who somehow got a 0 on a test. That person happened to be Jewish. Those things have no part of the...
What do you think is going on here? Meaning, really? I mean, I think, look, I'm Jewish.
Yes.
What do you think is going on here? Where do you think that this anti-Semitism has it been here the whole time? Has it been under the surface? Is it these agitators have taken over the campus? Is it actually the students themselves? What do you think is really happening?
So, I mean,
I know it's a big question.
It is. I was a philosophy major. That might be too big a question for me. My answer is that I'm surprised at the amount of anti-Semitism that's been in America. It caught me off guard. And you know, the second you give people an excuse to like really explain what their feelings are, I was at Columbia the other day, and the amount of venom they had to Jewish people was really scary. Not all the protesters. A lot of protesters are totally fine. But it's not just anti-Semitism. It's an anti-American sentiment as well.
That's been around, and it's been in mainstream media. Many people guilty of seeing people kneel at the anthem and wear pigs on their socks, and that all was fine until it got to the point where, I mean, this is serious now. And you can have a whole faction of the House of Representatives on the Democratic side that's called a squad that panders in exactly what you're talking about right now. And it's been out in the open, and they've been defended by Nancy Pelosi when she was Speaker. And these things have consequences when it goes unchecked. And this is where we ended up. And they don't want to hear that. And they're going to bring up Charlottesville and say it's 100 skinheads that started this. It's not. It's tens of thousands on the left, on the progressive side of things, that are to blame for this.
Well, you're speaking to someone on the left.
I know.
And
now,
I agree with you. I would go further. It's not that AOC and the squad are pandering. They're leading.
That's what I mean.
Yes.
But we were fine with it, and so was corporate America. They were part and parcel.
Jay, let me ask you this, though. There are only 2 weeks, 3 weeks left of school here.
Yep.
If you were not successful in terms of getting the entire campus back to campus effectively, which does seem hard given the fact that they're going to have police there till May 17th. I don't know what's going to happen with this hybrid sched program in terms of having people on campus, off campus. Do you imagine looking for monetary damage? I know you say you're not now, I know there are other lawyers who are watching right now. I just got an email from one saying, this is a fascinating lawsuit. We should bring, well, I didn't want to say they're saying they should bring it against another school. How do you see the actual litigation going? And do you actually see monetary damages given the fact that it is a breach of contract lawsuit based on the idea that the student paid a certain amount of money to be able to go to school?
Yeah, so, you know,
what kind of damages could be on top of the tuition? You know, are you looking for, would you be looking for tuition reimbursement plus punitive damage? I mean, how does that work?
Well, let's think about this. You're a parent, you send your kid to Columbia, and you know, they've worked their whole lives for it. You're spending a huge amount of money for the semester. It's not, this isn't COVID where they were just, you know, off campus with everybody else. They're under a hostile environment where they're under attack and they're scared to go to the university. How much would you pay for that? Right. Send your kids there? Zero. So there's certainly damages in this case. We don't want that to be the focus. The focus, at least short term, is that we want to restore some sort of, you know, adult voices to this. And if we do turn this into a damage case, it's going to remain pro bono.
Do you think the University of Florida historically will be viewed positively, or the way that it was handled down there? Because in this case, I think you're going to hear police brutality. If that tack had been taken with some of these previous demonstrations, not this one, not what's happening now, but if you were as heavy-handed as University of Florida was, there would have been pushback. Pick your demonstration over the last 5-10 years.
It depends on the demonstration, right? If it's right wing, then people say that's terrific. If it's left wing, then for some reason there's an exception. The second a protest turns violent and ugly, which is what's happened, the second you've got protesters who are calling for terrorist attacks on America, the idea that anybody would tolerate that, let alone negotiate with them, which is what you've got schools like Northwestern doing. What are your lists of demands? We're happy to accede to them. All that does is it leads to more and more of the same.
Jay, I want to thank you for coming in. Please keep us updated on your progress with the lawsuit.
Thank you so much.
Thank you.
When we come back, Amazon in focus. We will get into first quarter earnings from the e-commerce giants. And a reminder for you, this Saturday is the Berkshire Hathaway annual meeting. Warren Buffett will take the stage in Omaha to answer shareholder questions for 5 hours. And you can see it all right here on CNBC, also streaming on CNBC.com. It starts at 9:30 a.m. Eastern, Saturday morning.
and make it count.
Shares of MasterCard are lower in the pre-market trading this morning. First quarter earnings and revenue did come in above analyst estimates. Consumer spending continued to be strong, but MasterCard revised its guidance to project revenue growth at the lower end of its previously forecasted range. That stock down by almost 3%.
Amazon, the second to last of the big tech giants to report earnings this quarter. Kate Rooney takes us inside the numbers. Kate.
Hey, Joe, good morning. So Amazon's operating profit tripled in the quarter. That was driven in large part by Amazon Web Services, its all-important cloud business. AWS sales grew 17%, putting to rest any fears about a slowdown or Amazon losing any market share to other cloud providers, so Microsoft and Google. Enterprise and generative AI demand really helped in the quarter. Executives say AWS is now a $100 billion business measured by its annualized run rate. And then breaking out Gen AI, they say that is now, a multi-billion-dollar business. When it comes to ARR, CEO Andy Jassy saying there is, quote, considerable momentum on the AI front, but that growth, guys, can be expensive. Jassy saying that Amazon plans to meaningfully increase capital expenditures in 2024, similar to what we heard from other big tech companies, mostly on data centers and hardware. The $14 billion Amazon has spent so far this year, they say, will be the, quote, low point. Executives assuring analysts on the call, though, that they are seeing strong demand signals to justify some of this spending. That demand gives them confidence, they said, on spending, saying that it's going to play out in the long run, similar to what happened when Amazon went through their last big CapEx cycle. On the retail side of the business with logistics, that has been helping margins in recent years. Advertising was another bright spot, growing 24%. That was double the overall sales growth rate. Prime Video and TV-style ads have been a big part of that, Jassy said. Still early days, but the ad business, it's off to a good start, guys. Back over to you.
Certainly is. Kate, advertising and cloud-wise and AI, everything else. Thanks. Let's get a final check on the markets. The calm before the storm that could be Jay Powell later today. Down 54 points. Horrific session yesterday. You heard Tarullo again say that, that number sort of an outlier. We've heard there's been a lot of outliers. I don't know when the outliers become inliers, but this is manageable at this point. And I really don't know whether Jay Powell is going to affect things. I think the actual data is in charge now, not the Fed. The Fed's more reactionary.
That's actually a fair point.
Right?
Yeah.
I don't care really what he says. What he says is going to be determined by that next inflation number probably. There's the 10-year 4.66 and the 2-year 5.02. We really need to be renaissance. We have so many things we talk about here. It's hard, isn't it? To keep it all straight. It is interesting. Make sure you join us tomorrow. Squawk on the Street is next.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. We kick off May with futures red, Fed Day, and some high-profile earnings misses or guide downs. Starbucks, CVS, Skyworks, Marriott. Yields are a bit lower as this Treasury refunding announcement was in line. Our roadmap begins with the monster day for earnings movers. Pfizer, Kraft, DuPont, just a few of the other names crossing the tape.
Plus Amazon shares, they are up ahead of the open. Cloud sales growth accelerates. The company also aims for spending more on, what else? AI.
Yeah.
Shares of Starbucks are under pressure. They're down after a decline in same-store sales. It also slashed its forecast. We're going to be joined exclusively by Starbucks CEO. That's just a few minutes from now.
Let's begin this new month for markets after ending a rough April with that sell-off, Jim. Worst day since January 31st. Worst month since 23, September.
Yeah, look, some of it was because there's a belief that really this happened in the last few hours yesterday, that if the Fed chief is asked the question, do you think that the next move should be increase in rates or decrease in rates, it puts him in a horrible bind. What is he going to say? Now, this was literally the narrative I heard yesterday as interest rates ticked up. And David, you know that people are going to try to trap the chairman, but he's not easily trapped.
No, he's not. Although you're not necessarily in favor of the press conferences, as I recall.
No, because these people are teenagers. I mean, I ran a press conference. I've run press conferences and I've been in press conferences, and I am not impressed with this Hollywood Squares group that they put together.
That said, we are going to hear from him. He's not easily trapped, as you say. We can keep an eye on the bonds, of course. Not really that much movement at this point.
No.
And an
Despite Josh
expectation, of
Frost.
course, that generally, Carl, will not be much said that he didn't say, what was it, in his last comments a week or two ago.
Yeah, I think it was Julian Emanuel of Evercore yesterday, Jim, on the tape, said exactly what you said, that is the key to the markets in the near term, is what is his threshold for a hike?
Right, and this is this narrative that I actually can't stand. We were 2 for 3 in terms of the brown shoots yesterday. Consumer confidence was very bad, but Chicago PMI was very bad. Instead, we had this index, and suddenly people say that's the be-all and end-all, which is this wage index. And I just found that to be fatuous reasoning. There was so much fatuous and negative reasoning yesterday that, David, I found myself thinking, how many people want this market down already?
I don't know how many people, Jim.
437.
Is that the number?
Come on, it's over
pretty low,
Well,
actually.
that's actually like the House of Representatives, basically, yeah.
Jim, we do have, 10-year on the Treasury news did come back a little bit closer to 5. You got oil today, lowest since February, I think.
The war premium disappearing is a $5 war premium. It's not necessarily economic growth declining. We do know, by the way, that there's a permanent shutdown of the largest pipe, thank you, Russia, Brazil, beginning first 10 days of June. And so that's when I expect the next spike. I was surprised at this one, other than the fact that maybe there is, once again, a hint of peace talks. And this reminds me of the peace talks going into the first Iraq war, where we had peace talks every Friday and nothing materialized. But I think it's a notion that the war premium is going away, and I find that also a little fanciful.
Given some of the comments out of Netanyahu this morning, for example, that the Rafah operation, he looks to continue regardless of the pressure from Blinken today.
Well, I mean, I think that this is very difficult to talk about, and I would say that the idea that that Israel can divorce itself from the United States historically has not been true, according to the late Henry Kissinger, according to the late Richard Nixon, who was not a friend of Israel, but chose to resupply Israel during the Yom Kippur War and saved Israel from destruction.
Yep, in 1973. All right, can we get to earnings now?
Why not?
Talk Amazon, talk AMD, talk, I don't even know, Pfizer,
DJ
CVS,
DJ
J&J, Talc, I mean.
I've got stuff on every one of those.
Look, you got so many manila folders here, I don't know where you want to start.
No, I came in cold and haven't done my homework.
All right, enough. Just open one up and say something.
Okay, so Amazon I think should be up 10. And I'm going to give you why.
Because it's not up a lot.
Well, that's because people are so darn negative and they didn't do any homework. If they'd done some homework, they would have realized that almost every single line item was better than expected.
I mean, the margin was the best margin they've ever had. They re-accelerated growth at AWS, advertising all-time highs, and obviously we talk about that in terms of how a high-margin business. They even had a decent margin on the actual retail business.
And how about international was extraordinary. You're absolutely right. The ads numbers are extraordinary too. David, but my favorite was something right in your bailiwick, because I wanted to come armed for what you do.
Yes.
They like sports. And they say that sports contracts don't come up very much and very often. And when they do, they're of a particular interest.
Yeah. They're going to most likely be the streaming, so to speak, choice of the NBA, as we reported yesterday.
But why is it just streaming? They need to be more.
Right. Well, they're going to have a piece of the NBA contract.
Right, okay.
That seems likely. I know they're not most likely giving voice to that. It's not signed up. It's not agreed to yet, Jim. But we do know that there are a force there. Ads just starting on the Prime service, by the way, and yet you're still seeing significant growth. Obviously, advertising overall on the homepage is quite important.
Well, do you remember when AWS had gone from 11? People were saying it was going to be high single-digit growth.
Yeah.
Because it's 17%.
It's a $100 billion run rate revenue business.
And with incredible gross margins.
$100 billion.
Incredible gross margins.
I mean, if it were ever split off, if that was ever forced out, this would be an enormous company, as we pointed out many times, in its own right, with an incredible growth rate. What about CapEx? What do we make of the spend there? And has anybody done the math yet and just adding up between Meta, Alphabet, Amazon, and Microsoft, what they're going to be spending on CapEx?
Because they're spending so much internally.
Right.
And so it's difficult to get a number, although they will tell you that they've gotten right with Jensen.
Yeah.
They'll get whatever they want from Jensen.
I mean, they're spending so much on so many other things other than just AI, obviously, on distribution centers, on trucks.
But David,
who can take a drive now without seeing an Amazon truck? That said, they're going to spend enormously on AI as well.
Oh, absolutely. But they also are the trusted aid of so many companies that want to get on the cloud and then artificial intelligence, and that has restarted. There's been a normalization of companies going to the cloud. I keep pointing out the international, which was just incredible, that went from negative to positive. I don't even know how that's possible.
Take a listen to Jassy, guys, talking about why he's so bullish on AWS in particular and that $100 billion annualized run rate in revenues.
I'm very bullish in AWS. We're at a $100 billion plus annualized revenue run rate, yet 85% or more of the global IT spend remains on premises. And this is before you even calculate Gen AI, most of which will be created over the next 10 to 20 years from scratch and on the cloud. There's a very large opportunity in front of us.
Can I say?
Yeah.
I mean, this is a business that a lot of people, even literally, a year ago, people were saying this thing could be a goner. It turned out to be the juggernaut, and I don't think that you can stop it.
All right, makes sense to me then on AMD, which is going to be down despite what is that enormous spending going on for generative AI. Yes, it's not the main provider as we know, but it would seem to be a beneficiary. Investors, though, seem to be concerned about the fact that guidance did not go up that much.
Okay,
right?
so what is the incentive of Lisa Su to be able to say that the AI chips, the MI300, is going to be 5 to 6 billion next year? So she raised it to 3.5 to 4. So then the long knives come out for her, as if that means there's a shortfall. I even heard silly things like that Microsoft had done an order cut. That is just quintessentially untrue. The lies that are being told about this company overnight are shocking. The way that you can attack it is gaming was terrible and embedded was not good. That's the Xilinx. And Lisa Su is saying embedded turns this quarter. So do I love this stock? I know that they are head-to-head with NVIDIA for a lot of things, and NVIDIA tends to win. They do have, David, they have much better training software than they had last time. So, but the idea that she was supposed to raise to 5 to 6, and that's what got it wrong, I just think that that is fiction.
Is it a the bulls would told me it's a bottleneck, it's not a demand problem. True?
There's not even a bottleneck.
Not even a bottleneck.
No, she is the. But the issue is, why should she say this 5 6? What's the point? So you do a downside surprise?
Meantime, Jim, Intel's coming off its worst month, I think, in a couple of decades. Skyworks, of course, warning about below normal demand in mobile phones. They guide below on the June quarter.
The next sentence. Okay, let's go through that, because it so upset me that people are going out with that. So Liam Griffin, who is a total solid man, remember, you can't mention the name Apple, because it's like Fight Club, the first thing rule came in. Right. He says, we all got that. He goes, mobile business, we saw below normal seasonal trends, this is what everybody picked up on, with lower than expected end market demand in broad markets. The December quarter represented the bottom, and we delivered modest sequential growth in March, reflecting a turning point. It's the second part of that, the second phrase that tells me that even though I don't favor Apple, because I think it's up on a Tony Sacconaghi Bernstein bump, which is very ill-advised, the idea that he's saying things are bad just when he's saying things are good is extraordinary to me. And I'm not buying it. Plus, he did lose 10%. We know he lost business with Apple that was switched to Qualcomm. So we can't necessarily generalize. I don't like Apple ahead of the quarter. I do believe that it's up on a bubble. But to hang Liam and Apple on that first part of that quote, it means that you didn't finish the second part of the sentence, and that is unforgivable.
Yeah, got some decent, DuPont had some decent semi-technology numbers.
DuPont had great numbers, but that semi business is Taiwan Semi is the number one, and then the second one is Samsung. They are levered to NVIDIA. So, I mean, if you want to make an extrapolation there, you got to say that, once again, NVIDIA is better. That pre-announcement, by the way, was when that last pre-announcement that he had, where every line item was down, every one of those line items is now up. It's a rather extraordinary time. It's all come together. It's almost celestial in the way it's come together for Ed Breen, and I got to congratulate him. All that pastiche of businesses he put together is on fire. Even water filtration, which had been disappointing, and China's good for him.
Yeah, one of the few earnings stories that is up in the pre-market today out of DuPont.
4 points. Come with 4. That one's going 4. 4 points.
All right. Watch.
Water filtration.
No, that was the weakest.
Oh, no.
10% growth.
It's HVAC and water filtration.
Yeah, HVAC is the key to the market. I forgot. When we come back, an exclusive with Starbucks Chief Locksman Air Simon. Don't go anywhere.
com.
Gentlemen, when we look at the biggest loser today, it's going to be Starbucks. It's among the worst performers in the S&P 500. It's down double digits. Company posting quarterly results that I would say would be substantially below street consensus, and cutting its full-year guidance, one of the bigger guidance cuts I've seen in a long time. Joining us now exclusively is Starbucks CEO Lakshmi Narasimhan. Mr. Narasimhan, it's good to have you on the show, and I appreciate that you're coming on, despite the fact that the quarter was extremely weak.
Jim, it was a very tough quarter. Thank you for having me. There were three reasons for this. First, we saw unexpected pressures on our occasional customers, more intense than we expected, that impacted their visitation. Second, the choppiness of the recovery in China continued with a more intense price war than what we expected. And third, challenges of our business in the Middle East that impacted us not just in the Middle East, but also in other geographies.
Okay.
Clearly,
I understand. Now, what I'm trying to figure out, sir, is why did you not feel the need to pre-announce this shortfall, given the fact in the previous quarter, your CFO said that she felt that you could have a earnings per share growth in the range of 15 to 20%. This is a substantial decline from that. And given the fact that you said on the call that April did not end well, I'd like to know why you did not feel the need to come out and say our quarter is going to be substantially worse than expected at least 4 weeks ago.
I think, Jim, we've been working on action plans to address these headwinds. And so what we wanted to come back with was not just the announcement, but also the action plans that we have in place, which, by the way, are not business as usual. And I'm happy to talk about them.
Well, let's finish, because I know that investors are trying to figure out why they should hold on to the stock. Some of the things that I am confused about, I checked with all the major, both public and private companies that are in a similar business to you, and no one saw a 3% decline in comp stores because of weather, and none of them saw a negative number except for you. Is it possible that your coffee is just too darn expensive?
Jim, I think that if I look at the U.S. occasional customer, they've clearly cut back on visits to us. If you look at the value for money scores we have, they're still strong, but there's no question that the occasional customer is cutting back on visits to us. We have not been able to communicate to them the value that we provide. So what we are doing about it is, it's not business as usual, but there's an action plan we have in place in order to do that, to reach them and to communicate the value that we are providing. What we're doing for that is we are making it attractive for them to come back into the Starbucks app and join it. On the app, what you will see is you will see value that they haven't seen because they've not been part of that environment. There are drops that are going to happen every Monday. There are bundles that we're putting in place that are attractive for them. For example, a beverage and a drink at a certain price. And so what you're seeing there is the effort we're making in order to ensure that our occasional customers get to see the value that we provide.
Why did the loyalty program go from 34.3 to 32.8 in late quarter? I mean, those people are not occasional. Those people are hardcore. Why did your membership, and I know your membership was up 6% year over year. I'm not concerned with that. I'm concerned with late quarter. Why you had not the occasional, but the hardcore drop off.
Jim, if you look at the most loyal customers, they actually continue to come in, they continue to buy as frequently, they continue to customize and upgrade. It's at the tail of the loyalty program, particularly those that are, in the 90-day active, as we call it, the folks that didn't come back. They, again, are very similar to the occasional customers. We have an action plan in place right now to communicate directly with them with offers that have gone out even as...
Nailed the support, man.
In order to ensure that we can reverse the visitation losses that we have seen with them and to bring them back. And yes, you're right. Overall program did grow by 6%.
Right, that's necessary. But what's more important, I think, is the late quarter decline. Now, let me, before I turn over to my colleagues, you said it's not business as usual, and I want to make a point.
Okay. Today I'm going to work on my foul language.
Business as usual. You had, for instance, on the quarter, you
Some
talked about
bitch.
opening stores in Honduras and Ecuador.
So anytime I say a dirty word, I'm going to put $5 in the cookie jar.
And spend a deep dive and making it so that this decline in comp store
And I'm going to
numbers does not
donate
continue.
it. I'm going to go a whole day without saying a curse word. Like bull crap and bullshit and blotch. I might be able to say blotch. But I'm going to take, every time I say a curse word, and you got to remind me, I'm going to put $5 in a cookie jar and donate it to the homeless shelter here in Springfield, Missouri for FOMAC Day. And then I will double that.
Of the U.S. business. We are holding share in the U.S. We are still the largest player in out-of-home coffee. If you look at some of the metrics that we have...
Tim Horton said you are not holding share, sir. I regard them as being seminal companies that are just as good when it comes to... McDonald's says you are losing share. I can't go against those three companies. They are too good and too honest and too good for me to dismiss.
Wow.
We are the leading category player in coffee. I'm talking visitation share.
Wow.
To a high-low spread, and it continues more oversold.
Okay. We're going to go over the watch list. Now, the SPY, why did I pick 499.56? I got to remind myself because I don't remember. Because it was right here. So I had a support channel off this inverse head and shoulders. And that shoulder came down a little bit farther. So I took the first shoulder and the right shoulder and put them as support levels. So on the hour, we got to break the 21. On SPY. '21 SMA. Now I have the EMAs and the SMAs on two different charts on the 21 because I was wanting to see which one looks better when I go to scalp it. And Yoko, I want you to try, not Yoko, but franchise, if you're on here now. I want you to try the 21 EMA on one chart and then compare the 21 SMA when the 9 EMA crosses over it on the 1 minute. Now, franchise has been coming to me and telling me he's been buying the puts with the 29 crossing down over the 21 EMA, and he's been very successful at it. I'm thinking we're going to hit support here today after Powell, and we're going to move back up. I'm hearing different stories from different places, but man, we're at a solid support. I'm talking about the 21 EMA on the weekly, or SMA, with 3 black crows with a harmony candlestick pattern proceeding, which gives a very bullish generation of a bounce. You know what a harmony is? It's an inside candle on an engulfing candle. Shoes are off. So I'm going to draw that resistance line on that 21. What time is it? We got 4. Oh, wow, 4 minutes already. 501.56. If we can gain above 501.56. Fuck. Jimmy. I saw $5. $5 in the cookie jar. $5 in the cookie jar. $5 in the cookie jar. Oh boy, I'm in trouble. I might go bankrupt. I cannot watch CNBC today because I'll be spitting out right and left. Welcome back, Magnificent. Everybody was messaging me about you. Ooh, slash SPX. Yummy. I'm going to watch the SPX first thing. I think that's the one I want to trade. Because it'll be so cheap. Where's my platform? Hurry up. The 4080 strikes, or the 5100 strike for today, Lotto. Okay, where's my other? That's not the one. That is the one, but that's not the one. Where in the hell are you? There it is. Okay, we got a hammer leading out the gate. I'm going to grab here 230. I'm just going to scalp this real fast. Now this is called the beach trade. It's a little risky, but I've got a hammer and I'm going to play off of it. If it doesn't work, I'll get right out. $2.30 and $2.15. We've got two contracts right now. You're welcome, brother. And grab two more. Now I've got 4 contracts, and this is all I'm doing right here. 4 contracts, 2 more at $2. Hey, I've never hung out at Diddy's place. This is risky. I got a 211, 212 average, a 212 average. I never hung at Diddy's place. There were drugging chicks there. Damn it, Jim. Oh, damn. $5 more in the cookie jar. It's gonna kill me. Oh gosh. Put a tight stop on this trade. I'm thinking, well, you know, magnificent. I think Pow Pow's going to surprise a lot of people today. I may be wrong. Today's a big day. You know why I say that? Because I'm the devil's advocate. Does anybody know how to count to 3? Who wants to trade with me? It's really important we stay in this trend line right here. Rising wedge. That's not very bullish. Come on, baby. Don't do it. So I got $10 in the cookie jar. Come on. Damn it. Come it. Jesus, piddly sticks. Come on. Oh. It's not working. I have to look at puts here. This doesn't work. Now we got an expansion pattern. So this could work. We've been worrying about the Fed's plan since March. Hotter jobs figure, said Jim Cramer. The Fed chair does not want central bank to be hawkish, says John Hancock's Emily Rowland. This is the game-changing political environment, says strategic Dan Clifton. The market pulled too much of a forward outlook. Well, you're a little late on that, buddy. It's time to be an Uber bear. I wonder if Josh said he was out of that one. McDonald's down. /ES is up. McDonald's, I couldn't believe they were using that as an economical indicator. Boeing's moving a little bit. Baba pulled back to the 63. Nile moving a little bit. Hollywood, no good. AMC. God darn it. Golly. SPY had I should have noticed this at open. SPY had a nice little bounce. Snake breakout, pullback, boom. I'm encouraged. I really am on this here move. Pre-market. They don't say buy it though. Cannabis sector. This is how I want you to trade the cannabis sector. Fibbies. Oh, here we go down to 160. God darn it. Where's that? How come this thing keeps going back that way? So I want you to think about it like this. All of a sudden, these people are starting to get fearful. Why weren't they fearful when we were really really, really over exceeding our limits. So I just got to hold this trend line or I'm going to get stopped out. But I want to respect the 9. If we can get one candle above the 9, I think that's going to be the catalyst. And we've got 3 thinning bodies right here. So that's telling me that the buyers and sellers, the volume is probably getting lower right now. And I can check that out through the SPY. So we have an expansion pattern, and we're now under the VWAP. And we're at 170, so I ain't looking too bad yet. It can hit the 200. We break the VWAP, I think we'll go. And we'll look at the SPY too. So the SPY, I got 50148 to break. In the watch list, in the red, we got SMCI down 106, 666. SMCI. Norwegian Cruise is down 8%. Square. I don't remember putting Square on here. Oh, better watch this. Dadgum. I'm on the jet set, not the roulette set. Break it. Break it, baby. Tell me maybe. Break. Damn it, I think I just lost my support. Could be a fake out. I can't tell you how many times I'd sell on a fake out and regret it. When we could, that body just kind of dropped right down below that line. I about pushed the button. I said, nope, not yet. SPY getting trapped under the VWAP. Yep. says we're getting ready. We got falling wedges. I think we're getting ready to squeeze any minute. Any minute here. Yeah, watch QQQ, double bottom, snake, breakout, pull back, 1-2 freebie. Pot stocks are all down. $50 retracement. Did anybody watch my pot stock video this morning? It's a learning lesson. Ain't it, Mike? Starbucks shares slide 14%. Ooch. It's an election year. Just need to remember that. Yes, that's true. Is your scan live? Oh. I guess not. It is now. It is now. I got a 209 support on Tillery. To see if it bounces off this. TLRY, 50% pullback retracement to my support level of 209. I don't know if it's going to run here or not. I'm just telling you. Jim's at 185. He's looking better. Come on, baby. Did I tell you what I did? I squashed a bug this morning. A big black water bug. He got sucked up in my vacuum cleaner. This is retarded. Yuck. Well, we got the 200 on the SPY. Tesla. I haven't looked at Tesla yet. No, I just read Uber was a put. The Donald. So here's your GRWG. Anytime you get a huge breakout, pull out the fibbies. Take it right from the bottom of that channel, from where the breakout started, and run it all the way up to the top. And this is where you want to be if it's still bullish. Now we broke major support. This is what I was worried about. I could add 4 more. And that would really bring me to a good spot. We've been worried about the feds. Oh, screw the feds. Up, cookie jar, another $5. What did I have on the SPY? I had 497. Oh, shit. Another $5 in the cookie jar. That's $20. Randy, can I borrow some money? I was wrong. Starbucks. Ugh. That, I don't remember trading Starbucks back during the Obama years at $75. Sure in the heck I thought it was back in here, but no. No, this ain't right. It didn't get down that cheap. Yeah. $75. Back during the Obama years. $60. I think this is wrong though. And then I'm long Apple. We're at the 200 on Apple. Still in my SPX. Now see, if I'd have got out of that trade, I'd be crying right now. Because I would be $80. Plus, I'd be down, you know, a couple hundred. 250. I'm telling you, we're going to be very pleasantly surprised today. I know people are probably saying, Jim, that's kind of putting your arm out on a limb there. After today, I'll be saved, and I can go to heaven. Meta. Okay. TSM. Well, ooh, TSM's down quite a bit. Damn, 145. Shit. $5 more in the cookie jar. I got 25 now. I think I said the SHIT word. Because it went to 235. I mean 135. Went to 125. Man, I should have grabbed 5 there. I think it's given me opportunity to load more, but that would have really cooked the geezer right there. What's that? If we curse, you will put 5 into the cookie jar. If we curse, yeah. Yeah, I will. And I'll match it. $5 for spelling the word out? That ain't fair. AMC at 290. Kava. This is that one that had that big run. Okay, we got a 1, 2, 3 here. We broke that. Still above my support level at 499.56. That was an apple. A little bit more red on the calendar here. Or show. Got a head and shoulders on show at the 200. Let's get into another scan. TMX 63. Ooh. Come on, baby. I want this thing to break out so bad. 505.35 is my resistance. Right here. So I loaded up some more. $135. That gets me at 173. So we got to break the 50. You're on the 1 minute. As we come up here, you're going to apply some pressure to the 50. And that was my, I think that was my 1027. It's really not much solid support right there, so I don't know how I got that. Probably that right shoulder. No? Yeah, that right shoulder. That's on the 5 minute. So we got a fallen wedge. No, we just got a bull flag falling down. That's all that is. We got a TTM squeeze working. Two more minutes should tell us if that works. CMTX. Amazon's up today. Dadgummit. It hit that support line too yesterday into close. Cart was another one. They were pumping. Partnership with Save Mart Companies, C-A-R-T. I think we got oh. Here we go back down again. Tesla's about broke out of the flag. It's squeezing. Here I'm back at my entry again. 1, 2, 3, 4. One, two, three with a higher low. What time is it? 9:11. 9:11. That I didn't want to see that. It's 911. So that's a double bottom. Your virus scan is completed. We did not find any issues. NVIDIA knife. Yeah, I'm watching the 1 minute Roman on YouTube. Fed it 2, yep. So what was that again? Knife, NVIDIA. Oh, it's not looking too good for NVIDIA at all. So we got a 1, 2, 3 here on NVIDIA. This was the at 8:20. So now we almost hit 4 right here. The wick did. You're at the sweet spot. It has to break here. Has to break here. 1, 2, 3, 4. I put a lot, a lot of emphasis on that. Triple M is up $2. Johnson & Johnson's up. Pens. Didn't we talk about pens yesterday? Florence is awesome. Yes, she is. Thank you, Florence. The question to ask, is there a good reason to trade before Pomac? Yes. I've heard many traders say this. And I listened to another one this weekend that's real confident. He says, during FOMAC day, if the market pulls back, the odds of getting a bounce are increasingly higher. If you come in with an open and you're high, you want to buy the put. Because, you know, you're questioning what's going on, you know, you're up. So you don't want to buy into that. You want to buy the put for it to pull back. So I'm playing that strategy, and I'm hoping it works. It's not working so far. It's well, yeah, it's not working yet. I was almost 160 from getting out. I'm gonna still hold on to it. So I know the word hope is not the word to use, but I'm using it in the strategy, and I'm just gonna see if it. But I've been told over and over about buy the dip and watch it rip. But this is a very important meeting. I think this meeting today is just as important as the one that we had when he announced the rate, that he wasn't going to raise rates. I think this meeting is just as important or even more important because we're in an overbought market. Back then we weren't. We're in a way overbought market. Nobody's going to tell me any different. I've been saying it and we've pulled back quite a bit. And I still think we're way overbought. But we're definitely like SMCI. You got a 1, 2, 3 here. And we can pull back one more drop and make a new low under that 700. NVIDIA. I mean, anybody in their common sense would look at this and go, are you nuts? It's up 300%, 250% in 6 months. I mean, 650 is what it's worth. I wouldn't be bullish on it until we broke the 200, and I'd probably buy it on the 1, 2, 3 down here, maybe. And I'm still in this SPX. Okay, now, like I said, when I took this beach trade, it was going to be a risky trade. Now that we're starting to see a little bit of green light, it's looking a little bit better. And we do have our 1, 2, 3, 4. And we created a little wedge right here. Well, I thought we were going to break at 50. If we break the 50, we're off to the races. Or the 63 EMA. The 50 is the SMA. Now, MU's on the... I bet you MU is down today. It's one of the weakest links. NVIDIA is the strongest link. So I don't want to listen to CNBC or any of them today because I'll be putting a lot of money in the cookie jar. It's the first time we breached above the 9. See, the 9, this is called a squeeze. So if this candle gets in between here, the 9 is going to cross over the 21 like it did up here. See the 9? It crossed down over the 21, then we had to sell off. So now the 9's got to cross up over the 21 to bring it back up to the 200 on the video. SPX, the 9 is hugging up against the 21 right now. So if the 9 shoots up above that, we're going up higher. We are respecting the 9 right now. So we got a double bottom. Anybody on YouTube stuck in a trade? Spy is drunk. Morning, Tony. Georgia. Mannequin. It's FOMAC day. We're going to take the FOMAC trade at 2 o'clock. It's Bank of America's on the 200. Or still could drop more. GRWG, what was that other pot stock that top ones? Come on, break, baby. I'm not really that worried for some reason. I really am not that worried right now, so we just have to keep looking for the second wave entry around 499.91 and SPY. I think we break the 200 and gain respect above the 200. Yoko, we'll squeeze out of this triangle, out of this wedge. It's a wide wedge and it's not very tight. But if we gain respect above the 200, a couple candles, not just one, maybe a couple. Here we go. Here we go. Ready, set, go, brother. Break it. Break the VWAP. Now I've got the, I'm gonna leave the 51, 61, what is that, 61? 51. Break it. I'm telling you. The Powell's going to surprise the market. I'm wondering if they got a chartist artist in there to tell Powell when not to be hawkish and when to be hawkish. You know what I'm saying? Because we're on that 21 SMA on the weekly. I got 10 more bucks and I'm even. That would have been cool to have one more crow right there, one more soldier. So this is a falling wedge. One, two, three. On the SPY. And it drops right back down. Jesus. Man. I didn't say a dirty word. I said man. We've got some ready, set, go power. Oh, I want to look at that other pot stock. I'm still in the sucker. $160, baby, let's go. When I was a child, my family would travel Western Kentucky. Parents were born. It's a backward old town, it's often remembered. So many times that my memories were worn. Question, ask yourself, is there a good reason? I already did that one. Florence is awesome. Florence is very awesome. I look up to her. Looking for a second wave. NVIDIA down $10 from Key. You mentioned that she expects a... What? Yellen mentioned... Well, she did. Yep. Yes, yes, magnificent. And that's another thing. Biden sent her out on a political speech. Come on, baby. Let's break it. We're above the 200 now. Randy, wish me luck. I'm at 25, magnificent. I'm at 25 bucks. Do you understand? We're at 165. They're 170. I made it. I made it. Now break it. Darn, I ain't got too far. Well, I got a ways to go. Break it. See, stock gods, I want you to know that I see my mom every weekend. She's 85 years old and she's had triple bypass surgery and diabetes, but I still go visit her every weekend. So break it.
consider here. We've got a little bit of a
Carvana.
between our trend line and our yellow 21 EMA, so right around 78, 80, maybe let's call it $80 or so. And then these lows here, that's a key point to hold.
Gap
if we
fill.
break below that, then we could be in trouble here. But what goes up could come down. You never know. We get a high flying name like this. There's volatility. It could.
One of these days, I'm going to take you out to dinner, big guy. But I need to know how many meals you can eat at one setting. No offense. Do you remember my speech about the cannabis sector yesterday? And if you watched my video this morning, I repeated about how good this could be. Plus, I repeated that it's not really a major sector that people like to trade. It bounces and pulls back, gives you plenty of opportunity. So we're going to keep watching these. Magnificent, will you give me a good grade if I break out of this here resistance? And we end up at, I'm going to give you a number. We're going to hit 50.47 today. We're going to hit 50.47. Problem? Problem? Maybe. If we hit 50.47, I want a trip to Mexico. Anybody else got the balls to put a resistance number in today? Yoko? Subway? Jen? Oh, now is balls, is that a nasty word? We're even, buddy. Break it. So you could have got these at 125, 120 when I added on. And you'd be up real nice right now. And I'll kind of walk to where I thought we'd have to break the resistance. Showing a little bearish sign here. Okay. I'm going to go nuke my coffee and I'll be right back. I want to see a blanket. So we're going to pull back to the shoulder one more time on Apple, and this is when we got to take the trade. I'm going to put 176.38 in here. That'll be the second right shoulder. We got a symmetrical flag on Amazon right now. So if it comes back one more time, well, actually, yeah. just think about this. Magnificent made a good point. It's election year. He's smart. Then he mentioned smelling yelling, out doing the dirty work, because Biden can't speak. Meta double top. So I wanted to get above the 50, and that's what we did. And we respected it on this pullback, and we're squeezing again. If the 9 stays above the 21, we're still bullish. The 9 EMA above the 21 SMA. The SPY looks bullish. We're above the wedge. SPY looks bullish, really does. I mean, that looks real bullish. That's the second touch. We had the breakout, pullback, and then the second touch. So we hit the sweet spot down here. 1, 2, free. 1, 2, 3. Now, I really want people to understand that when I take the beach trade, it's a risky trade, and it usually works all the time. But the rookies need to get in it when a pattern starts to form. So we had a 1, 2, 3 and a 1, 2, 3. And that's the sweet spot. And we broke the sweet spot. That's very bullish. You understand? Anybody ever been in a Marine in here? Do we have a Marine in here? Do we have a Marine in here? Do you understand? I think you know what I mean, right? So I got 8 contracts at 173. And that's under my limit. I try to keep it under 1,500. Right now we're at 1384. I'm gonna get a nice paycheck if she bounces. Okay. I'm a little too far out of the money, I think, on this now, but that's my problem. I'm still sticking at 165. If I get a big old candle out of this, I'm going to sell and then hopefully buy the dip once we hit 501.56. 10-4 on the SPY. If we break 5027, this is my big resistance right here. I'm telling you. Blake it. Blake it. Randy, tell it to Blake it. Pay up. We're even. So I'm going to go, I have to go in there. Been hearing that beep. That's my coffee. Dang, I wish I was still in these spies. I sold the spy. I regret it. Do you remember that time, Lord, when I picked that cockroach up and took him outside? Cockroach is not a dirty word. You should respect the cockroach. See my mom. Uh-oh. 175. Should I sell this thing, get out of it, or do you want me to hold it? I need help. Brandy? If you hate Theta, consider trading futures. They have none. Oh. Oh. I got to write that down on paper. I'm at 175, 180. We're going to the 200. We're going to 50-40. I guarantee it. I'm not pumping this stock. I'm telling you, I feel very bullish today. When that pow-pow gets out in speech, well, folks, I've been wrong for the last 2 years. We're going to start the interest rate cuts today. It says it's not working. I know this worked back during the Nixon years and the Carter years. AMD. Let's go back to the watch list here. The Donald has pulled back a few bucks here. To the 50. So if it doesn't hold here, you got 3 more channels to drop, 2 more. This is at support right here at 45.12, brother, with another mother. The Donald. This is a cup and handle. Breakout. Snake, breakout, pullback, boom. I'm at 190. I'm up $20. I'm at 190. So see, sing us strong, sing out loud, sing out strong. Oh, resistance 50156, Loco, Yoko. Dad gonna get rich on Route 66. I sold. I'm still in this sucker. Oh, I didn't. I'm out of the SPY already, yeah. But I'm holding this SPX because I want to get to 5042. You understand? Marines? Say yes. If you're not a Marine, say yes. Please. We got the 200 SMA on it too. Nice double. Did you get that mannequin? That NVIDIA call? The Donald bounced too off this 45.12 that Jimmy mentioned. Snake, breakout, pullback, boom. For some of you that are new in here in the room, I mean in there in the YouTube, this is my strategy. I'm going to show it to you real fast. It won't take a second. You learn how to do this, you'll make you a ton of money. Snake, breakout, pullback, boom. You got an inverse head and shoulders. So I always say wait for that there pattern to show up on the bottom. Once you break out, you got to look for some kind of pattern. Then you notify the pattern, then you can take the trade. This can last. Yesterday I was in one for almost 50 minutes before it finally broke out. Some can take 10 to 20 minutes. But you don't jump in the trade when it breaks out of the channel. You wait for the pullback and then get into the trade after it forms a pattern. If you don't let it form a pattern, you're going to get stuck. You're going in blindly. There's two patterns in here. There's a fallen wedge and there's an inverse head and shoulders. And I'm going to show each one of them to you while I'm still in this SPX. That's called an inverse head and shoulders. So you create a left shoulder and you create a head. It breaks out and pulls back. No, it's not the time to take the trade yet. You wait for the second pullback. That's called the right shoulder, hits twice. Then boom. Don't take it on the first. Let it consolidate. Flag. You got a falling wedge. Off of a head and shoulders. So you got the snake with a falling wedge. If you can count to 3, you can trade with me. If you can count to 4, you might make a little bit more. So you take your tops. 1, 2, 3, 4. And it's that simple. Snake, breakout, pull back into a pattern, inverse head and shoulders, falling wedge, take the trade. It's squeezing right here. So any rookie, don't take the beach trade with me. If you don't know how to read a chart or candlesticks, it's not the trade for you. You're taking a big risk. You're going in blindly. You got to be able to read the candlesticks. If you can't read the candlesticks, do not take the beach trade. Wait when it gets more simpler. Let the knife fall, let it break out, pull back, boom. And today I'm bullish today, believe it or not, against all odds. We'll just have to see if I'm right or not. So far, I'm green. AMD's pulled back to support. See, like the Donald here. Oh, that's the one we just did. I'm going to get back in this SPX. I'm going to move this up a little bit. I'm going to get above the money this time. The 50/70s. We could come back and hit this other shoulder right here, so I'll wait till then. I'll set an alert right there. Mark below. Three black crows. So let's look at AMD. I'm gonna move it. Okay, I gotta wait for this SPX. Or the SPY. Let me look at the SPY. Oh, SPY, ready. Let's go for the SPY. May 2nd. The 505 strike. Falling wedge. What was resistance became support. Remember what I said earlier about it breaking out of a flag? And it come back and retouch that resistance line. So now you've got the right shoulder hitting twice. 10-4. 120. The 505 strikes. For May 2nd. This is a scalp. I call scalping. I gotta go get something to eat. 10-12. Oh no, you'll drop. Oh. It's tougher to trade in a bear market, that's for sure. It's not as easy. So I'm in these 120s at 505. I did not hang out at Diddy's place. I did not hang out at Diddy's place. Tweezer 3-minute spy. They did not hang out at Diddy's place. Mike did some real tense, made a real good trade on Lily, and he did a lot of homework. And I was quite impressed with that trade. Walmart is a recession stock. If we go into stagflation, we had a double bottom here. High or low. Decoding Walmart's options activity. Oh, really? Walmart takes bold step with better goods, food expansion. Oh, God, here we go again. Always clean. My name's James Howard. Hello.
Yeah, James, this is Mike from Diabetic Health.
Diabetic Health. Am I all right? Is this a doctor's report? Oh, yeah, I'm James. Well, my doctor calls me James.
Okay, James, do you have diabetes?
Yes, I do.
So that's why we're calling you, James. And whenever you check,
I really don't know if I have diabetes, but everybody in my family does. But they all smoke and drink Pepsi, huh? They all smoke cigarettes and drink Pepsi. What'd you hang up on me for? People, they just don't want to get personal anymore. Ooh, had a little knife here on SPX. Darn, let's see what's going on here. Man, these 505s are at 108 now. Oh, it's on the SPY. So that's 1, 2, 3, 4. Wow. Well. Here I go again. I'm not going to be trading much more today if this keeps up. Huh. Well, I got it at 120, and we're at 106. We got 3 black crows and 4 black crows and a hammer. I could add it 108. I got 499 for support. We can hit that. Plus I got a 497 something. Wow, I don't know what to do. Been a tough day. I'm going to hold on to them. We did break support. I'm going to go pee and I'll be right back. I'm still in this trade. I should probably grab some at 108 off his soldier. Yeah, I should grab some at 108. This is really sexy right here. If we get 108, I'm going to get more. For right now, I'm staying at the 120s. Here we go. So I got 120 and 108. You can grab some at 108 if you like, but this seems like a real risky day to be playing around. Nothing like yesterday, that's for sure. I got an average of 114. One, two, three, four. Now this is the last sweet spot of the day. Okay, this is it. No more dippage. Because then we'd be on number 5, and then we could have some real bad problems. This was the sweet spot right here. But this is your last chance, number 4. Does that make sense? That means we're going to come back up and do a triple top again. I'll be right back. Uh-oh. I'm a winner. I'm eating chicken dinner. Jerome Powell was a pal of mine. Every time he came over, we'd smoke a dime. He always liked his Bud Green. So I gave him $20,000 to drop the interest rates. Oh, Chairman Powell was a pal of mine. He always liked to walk that thin line. We need this stock to break, for heaven's sakes. With a friend like Powell, what does it take? Walmart snake. I'm still in the SPX SPY, baby. Now we're retesting the breakout. Everything retests once it breaks out of resistance. Walmart launches new grocery brand. Hello? That's doing good, Joe. Chip stocks new low. What's in the video? Come on, baby. There we go. Rodney. I'm even. No, I'm not even. I'm way ahead of even because I got them at 108 and 120. We're going to break the 200 SMA, folks. This is called the VWAP. Now I want to show you a very important trick. You ready? You see the 200. Now if this 200 can gain respect above the VWAP and shoot up, this here will follow it. 10-4. That or you get out here, as you hit the 200 SMA is a resistance and the VWAP. So if you're trading the VWAP and you were down here, that's a scalp. That's an exit idea. I think we're going to go higher. So I'm still hoping and waiting. Because I think this is going to be a trick pony today. I'll tell you why. I'll show you why. I'm so confident in this market today. You see this white line? That's the 21 SMA. Week 1, week 2, week 3. We've been hovering on that 21 SMA. So if you can count to 3, you can trade with me. And we're going to hold that support. Because if we go below that, all hell's going to break loose. Damn. $30. 35. I said damn again. 40. $40 will be going to the homeless shelter once I leave this building. And I'll find the first homeless person that stands out the building, and I'll give him whatever I end up today. So one homeless person's going to have some money today. In fact, if I get it up to $100, I'm going to go out and buy 100 hamburgers and ask Burger King to give me a deal so I can hand them over to the homeless. So that's my reasoning why I'm so bullish right now. I just can't see us breaking down below that 21. I'm up a couple $100 here. I still think we're going to be up here at the 200 and finish this expansion by the end of the day. This is called an expansion pattern, YouTubers. The only time you see expansion patterns is when the market is bearish. And we've been seeing a lot of them. So I'm going to think if we break this 50 SMA, this is the 61 EMA. This is a scalping tool that I use to get out of the trade. The 9 is crossing over the 21. As the 9 respects the 21, it pushes it up. As long as you keep above the 9. Now this is, all day traders use the 9 or the 8. Most use the 8. I use the 9. That'll keep you in the trade. So let's say you're up a couple $100 and you want to hold on to that money. You want to set a stop below that 9 EMA. We've already proved that we might be a little bullish here because we crossed the 21 SMA. We're squeezing right now. So any second, it's going to give us a delivery, up or down. Like I said, if you're in this trade and you're up a couple hundred, you see an exit idea. As long as I'm staying above the 9, I'm going to stay in this trade. I mean, as long as the 9 stays above the 21, I'm going to stay in this trade. Does that make sense?
Over at Citizens. Thank you so much for being with us. Would you agree that the M&A pipeline is looking pretty strong? That companies have money to put to work and it's flowing. Do you find a difference?
Why did you have to wear red today? Who told you to wear red? When you woke up this morning, honey, you said you were going to wear green. Did you go to somebody else's house? I'm disgusted. You don't wear red on FOMAC day. Calm down, Jim. She didn't mean it. She's wearing red. How dare you? I just got an indicator. The woman in red. 125. Let's break the 50. And we're going to go to the 200. So remember, any rookie, you do not take the beach trade. We could have had a nice pop this morning. I mean, I was really looking forward to it. I cut my stop losses fast, added on, and I was able to get out of that trade. But wait for it to break out of the snake. I already knew what kind of pattern I want because I saw the expansion pattern. So I'm still waiting for this thing to come up to the 200. I'm not scared yet. I'm not scared. We break the 50, it's a shot up there pretty fast. So people on YouTube, I'm going to give you the moving averages of two different charts. So get your pencil and paper out. We talk about chart patterns, moving averages, and being in the now. We're going to start off with the EMAs. Start out with the 9, the 51, and we're going to add the 63. I don't know why I don't have the 63 on here. Well, no. This is the 51. So we got the 9, the 51, and that's it on the EMA. The SMA, we have the 21, the 50, and the 200. Now on the other chart, the other chart, which is more simplified, this is a trick I want to show you. First, I want you to write down these numbers. Jot down the EMAs. The 9, the 21, and the 63. And then the 200 SMA. So this is Walmart. Walmart, we got a knife. So what you got to do is you got to draw in the knife. I'm still in the SPY at 125. I'm going to keep watching it here. So draw in your channel. So you're sitting here, you're watching the channel. It breaks out. You do not take the trade. You got to wait for it to form a pattern. Do you see any pattern in here? That's called an inverse head and shoulders. So you got the breakout. You got the right shoulder. You got the head. You got the left shoulder. And it breaks out. And then it comes back down to the right shoulder again. So you take this trade. Once it breaks out and it forms a flag. The 9 crosses the 21. You stay in the trade. The 21's showing respect. You stay in that 9. Stay in that trade. Stay in that trade. Stay in that trade. You're still holding the 21. and then all of a sudden you break below it and you get out of the trade. So you took the trade right here on the pullback, a double bottom, or jumped it right out of the snake, and you sold it right here. When the 9 crosses down over the 21 is your exit idea. I can show you chart after chart after chart, the same strategy. Knife, inverse head and shoulders, breakout. 1, 2, 3, right into a symmetrical flag. I got to get nerve. Oh, 133. I guarantee you can win almost every trade if you just wait for that snake to break out, pull back, and create a pattern. We're at 133 now. Randy, I got 20 of these babies. $20 of them, baby. Who took the trade with me? We're going higher. Now I'm going to show you an exit idea. If you're in this trade with me right now, if you're in the trade with me, if you know how to count to 3, you can trade with me. I make it as simple as it can. I mean, I could teach a 3rd grader how to do this. If they can count to 3, what? Say what? Turn down for what? 1, 2, 3. You're getting at an exit idea. You're getting at an exit idea here. We counted it off number 4. I said this is the last chance. At 108. And look where we are. We're up 30 cents. I got $600 waiting for me to cash right now at a triple top. Triple top is an exit idea. You don't want to hold it. You want to get out and take your money now. Bingo, baby. Now what's next, Jim? Man, Jim, I just took that number 4 and I made a little bit more. And I took it to the triple top because I can count to 3. I'm really impressed. I want to go ahead and pay for your trip to Kabul. I don't want to go to Kabul. I want to go to Mexico. There's a war going on over there. We're going to drop. So what's the next move? Can anybody tell me? It's the VWAP, brother. We're going to hold the 200 SMA or we're going to hold the VWAP and we stay bullish and we run up here and we break number 4. We come down, back down here again, it might get a little testy, a little bit nasty. Because we've already stretched our boundaries too much here. We're pushing the limit. We don't want it to come back down. But it will, because it's FOMAC day. I'm happy. I nailed it again, man. Because I can count to 4. Nailed it. My burner, I gotta go in there and make my sandwich. I smell iron skillet. Jen, I owe $40 in the cookie jar. Do you want to match me? For every cuss word I say? Yoko, would you take that trade? Magnificent, can I have a grade, please? Oh, I put that in the wrong... What did I put that in? Wow, I've been putting my charts in somewhere else. Ah, I put it in the trade setup. Okay. Well... I was in the wrong room. Not for overtrading. Oh, if I look, I have a Head and Shoulders from yesterday. Did anybody count to 3 on that trade? Cut off from chalky milk. Teamwork makes the dream work. Oh, y'all were talking in here, weren't you? And I was just in my own little world. My apologies. Yay. Most of all, you're my best friend. Most of all. I'll be right back. We're back to the VWAP. Jimmy said VWAP. I'm gonna go make my sandwich.
The company saw substantial growth. Advertising, cloud computing, and generative AI. More of that in the next decade. We'll dive right in. We'll be right back.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network.
Lichtenstein.
Anywhere on any device for free.
I was born on the south side of Chicago. It has been a long road.
It was a long road. I remember when you had your finger chopped off that day. We were out cutting firewood. You said, Jimmy, let me pick up this stick. And I swung the axe right when you said that. And I chopped your finger off. My bad. We were best friends.
Up $12 to $233.
Up $12 to $233. Dan, where do you feel this is headed and why?
Yeah, I agree with that. I thought it was a really nice quarter from almost every angle. I thought the AWS acceleration was a key takeaway there. I like the discussion around AI. That's a multi-billion-dollar generative AI. Excuse me. That's a multi-billion-dollar run rate business for the company now. 17% year-over-year growth for Amazon. That's an acceleration versus last quarter and versus a year ago. So that looks really good to me. So those are the things that I was really pleased to see. I like the improvement in the e-commerce business as well, with improvements in margins, delivery speed, order frequency for Prime members. I think those things bode well for long term. And so I agree that the guidance, they do generally tend to guide a little on the conservative side. The operating profit guidance was sort of in line anyway with expectations. So you saw a little bit of downside to the revenue number, but not alarmingly so.
When we talk about CapEx, you sort of both mentioned this in AI. And so, for example, we heard from Meta and everybody sort of balked at the spending that they were going to be doing.
I'm gonna explain again. Are you, Big C, are you on here? Man, my underarms stink. How dare you? I do not like to be ignored. I don't like to wait. What year is this year? Okay. Is everybody ready for a test? Hope I still have it. This was me back in 1970. I used to work for a cult. It's me back in 1970 when I was with a religious cult called the Mopheads. We would frequently travel across the country cleaning restrooms out of dirty subways. And then one day I met a warrior, and he came out and said, "Warriors, come out and play!" Back when I was doing shrooms. So we get another knife. What is going on here, Jim? If you can count to 3, you can trade with me. And if you got out of that trade, and look at this thing, drop $600 on me just like that. So I'm going to go in there and cook my sandwich. When you're nearing resistance, you don't play games. You don't play games. You get out, like Jimmy did. At a 114 average, and got out at 137. Now I can take this trade again when we come back down to support. But I got to cook my sandwich. I got to eat. When I come back, I'll show you another one. We'll find it within 10 minutes. Now again, I want you to look at the pre-market action here. I'm going to show you how to find a channel to play today. So you have your double bottom, you have your bottom, and you have your top. So any rookie that's trading right now knows that you could trade that channel today. Or you could. I mean, in 9 to 10 times you could probably trade that channel. So right at open, we had a snake breakout, pullback, boom. And that was bullish. I jumped in the trade too soon. I didn't recognize the pre-market run. If I would have waited, I should have waited to scalp that because we had a pre-market bounce. I should have waited instead of trying to take that beach trade. That was a big mistake. Next time I've got to pay attention to that pre-market movement. If you don't, because we were at a top. Why I took it there, I don't know. If I would have saw this, I would have not took that trade because I bought it at resistance. That was not a smart move. But I held on and I made my money back. Still, it wasn't a smart move. So that's your channel all day today. We could, by the end of the day, we could knife down here and be, oh gosh. We might do it right now. You ready, folks? I'm never going to be able to eat this sandwich. Here, I'm going to set an alert and try to make a sandwich. Here's a Head and Shoulders. It's just straight right there. Watch it stop right there. Here we go, baby. This is it. This is it. Load it up. You're getting the bottom here. Anybody take this tray, man? You're making it. Oh, I told you. Oh, hell, that was right. Damn it.
My sandwich. That's number $5 more. Damn it. That's another 5. Well, hell. That's another 5. I'm up to 65 now. Okay. That's a nice trade right there, buddies. Yo! Randy gave me a grade. Not even have to ask for it. Germans? Oh, okay. Phew. I about forgot about it again. If I had to make 2 sandwiches today, I would 3 of them. Chips. I'm eating my second burnt grilled cheese sandwich. I'm up to $65 in the cookie jar. Did you hear me say a nasty word in the kitchen when I burnt my sandwich?
Did I turn my burner off? No, gosh. Be back at 2. Labor Day on May 1st. It's not just because of full Mac. Watch Meta here. One, two, three. We got out of the trade. She didn't hold VWAP. I'm gonna go make me some coffee. Can't believe I had that skillet on for at least an hour and a half today. Anybody ever eat their food on a cutting board? Piece of wood, cedar wood? I did it. Gonna get ready. I didn't say it. I wanted to. Okay. You're bored? Who's bored? I'll fix that up real fast. I can fix that. Did you know that Logan Paul's husband is pregnant?
Lithium business is for you. The lithium margins right now are. Do you like minting money? Well,
God loves me.
Business is for you. The lithium margins right now are practically software margins. We're seeing cases where the spot lithium price is 10 times higher than the cost of extraction.
I love you.
Do you like mint? The lithium margins right now are.
What happened to the Logan Paul commercial? You sucker. You faked me out. That's funny. I want to get him for that. It's too much. We got a 1, 2, 3 down here. Watching it, getting ready. No, right back. Come on, you dick. Oh, darn it. That's $70. I'm counting dick as a curse word. Oh, Randy got kicked out of the room. Randy, you still here? Saying Dick Trickle? You gotta be kidding me. Randy still here? Randy? We don't allow swearing in this room. You just got to give me $5 for the cookie jar. Randy? $5 for the cookie jar. News briefing. This is radio station KSCP here in Springfield, Missouri. We just got a notice from the White House. No response from the Hamas ceasefire. Hostages release proposal. No response from Hamas. You son of a... This is radio station KSC, keeping an eye on them Palestinians protesting in New York, loving the genocide. This is Howard Stern. I'll catch you later. Hello, my name is Richard Nixon. Back when I was president, we didn't have no Palestine. We were in China. I sent my friend Henry Kissinger over there, and he made a deal with them Chinese. Oops. Sorry about that. I just remembered a flashback from running against Kennedy back in '61. That was a tough race. Oh. Hey, I thought... Magnificent. I guess, how can we get him back in here? He can't post. Mike's not here right now, is he? Oh. Randy's not been muted. He's not been blocked. I don't know how to fix it. I'm not that smart. He's in timeout. How you get him out of it? He said a word. He said a dirty word in the room. Randy did. Don't you ever say Dick Trickle in this room again. I don't even know if I should type it in here. I'm not going to. I'll be timed out. Never mind. I was going to type in Dick Trickle, but I think I'll take that back. How do you get him out of timeout? You got 15 minutes? Oh, there you go. Ick Prickle. I got to get this. I got to get him out of timeout. Let me see if Mike gets this message. Randy. Oh, I just farted. We're getting ready for takeoff. I just got a clue from my butt. It said, so whatever that means. Jim, could we hit 499.80? If it doesn't hold the 500, yes. We could drop 20 cents. Jim, is that true that you drink instant coffee? It's none of your business. Jim, are you locked and loaded? Will you show us how to trade the FOMAC? Yes. Then we're going to do the SPY or the SPX. Which one do we want? Let's do the SPY so we won't lose as much money. So let's get the zones in here. Now I want you to watch this real close. The 499.50 is going to be the call. Get ready, because we're getting right there where I'm going to get in a small position. We got 499.50 for the call. Okay, we're about 499. Resistance, put 502. So what did I say again? 499.50. $500. Let's go one below it. No. Let's go to 501. And no, that's the put. That's the put. That's the put. God. Okay, well, if that's what it is. I'm going to do a straddle. Discord is messing up. I just got the word that Discord is messing up. Randy's back in the room. Kick him out for saying dick licking. Randy, I'm going to have to spank you. Oops. Randy's back. Did you miss us, Randy? Can you hear me now? Can you hear me now, Randy? I think you learned your lesson, didn't you? Did you learn your lesson? Today is cookie cuss day. Anybody cusses, they get reprimanded. You fix things for you? Gosh. See? See how much you were missed? You know, I think Magnificent needs a pat on the back. He's not appreciated enough. For that, you don't have to grade me ever again. A+, boom. There we go. Bingo, baby. Go pop. And the Beach Boys. Break it. Break it. Break it. Turn it down for what? Break the V-Walk, yeah. Boom, yeah. Break the V-Walk. Bam. Break the V-Walk. Break the V-Walk. break it, break it, break it, break it. We just squeezing between the 200 and the VWAP. That was a cool trade. I called that sucker from here. I said we were going to pull back to that dot. We pulled back to that dot. Jimmy jumped in. Now he wants to break the VWAP to bring it up to resistance at the 1, 2, 3. 1, 2, 3, 4. If you can count to 4, you just might make a little bit more, brother. You can count to 4, you might make a little bit more. Beautiful. Bam, baby. That was a nice trade. Down here, $506.38. What? Now, Randy, when you took your little break and you got kicked out of here, were you drinking moonshine? I think if we break 501.74, you might get your wish. But tomorrow, now this is what's going to do. I'll tell you exactly what's going to happen. No matter what Powell says, CNBC will twist it. They'll look for the least, any kind of sense of stability in his wording, in the way he speaks, and they'll come in and they'll justify everything he says, and they're going to say, well, we hit solid support at the SMA 21 on the weekly, just like Washboardjim said. We need to pay more attention to that guy because he called the top, he called the bottom, and Magnificent is my witness. I called the bottom in advance before all them idiots did. And that's why CNBC Squawk Box should listen to me, and Schwab should hire me and make me the chartist artist. Oh boy. Fat cats are back. Oh shit, I forgot all about this trade. It's SPX. Get down here to the triple bottom again. Now look, I'm gonna show you a trick. Take the body of that candle and run it to the body of that one and set an alert right above that 500 again. Or where are we here? What did I just do? Yeah. God darn. We got iron butterfly. I should try to get that at 3. Break it. Break it. To the Hey Josh, people are emotional on their decisions, then justify it rationally afterwards. Let's predict what's going to happen. We know this is a bull flag, right? We've nailed all the bottoms, and we've nailed all the tops. Now, you know what we see here? We see another flag. We really want it to hold to 63, but when FOMAC comes, we could just, boom, drop right down here real fast and bounce off that 500 again. Now, we got the 200 SMA here and the 63. If the 63 crosses the 200, I think it'll push that stock up. This is a symmetrical flag. I'll point out the flag to you. You made a real important statement. And this is what I want to teach. I want to teach people not to make the discussion and decisions afterward, but to predict the next move. You know? So we take it to this next one right here, and we spit it out of that channel. That's a bullish indicator. So we come back up, break this double top, and come up here to the top. And that's my next prediction. As long as we hold the 200 and the 63. If not, we're going to fall back down to this bottom support level and take it there. I'm looking ahead. So Smelling Yellen was out giving speeches about real estate today and the interest rates. I think behind the scene they're going to come out and be a little bit more dovish to where the market can move back up off this moving average. So I'm predicting the next move off of this moving average on the weekly, holding up the 21 SMA or EMA in this case. This is 3 weeks of holding up, waiting for this moment today. We had 3 black crows, and we have a what you call a harmony bullish candlestick pattern. When you have an inside candle green on a red candle, that's called a harmony. Harmani. Harman, harmony. So there's all kinds of things that are telling us that we're going to go to an uptrend. A harmony definition of a harmony candlestick. A bullish harmony is a candlestick indicator used for spotting reversals in a bear market. We've had 3 weeks of downside. It is generally indicated by a small increase in price. Signified by a white candle, it can be contained, blah, blah, blah. So you got your candle right here, just exactly the way it came down. Candle, then you got this candle, and you got that. And I always like, when I'm looking up stuff, I need to pay attention to my trade. When I'm looking up stuff, I like to go to image. So you have a harmony at the top, it's going to pull back. You have one at the bottom, it's going to move up. See what I'm saying? So make it to where you start predicting the next move, and it'll increase your probability by a lot. Whoa. What'd Jim say? What'd Jim just say? Randy? May have another A+. Turned down for what? What little YouTube, Parge, what little bit of news, that's good news to them. You got me? If they're cleaning up their balance sheet, which is the main purpose of all this bullcrap, punishing the middle class and the poor, so the 1% can get back on top of things again, I think is a cruel thing to do to the United States. And if Trump was in office, we would have never been in this situation. We wouldn't be in no wars. We just spent 306. Just I heard this morning we spent another $360 million for a package in Gaza for relief. So we're paying Israel to bomb Gaza, and then we're paying Gaza to get better. And then we got BlackRock making tons of money in Ukraine. If I was a Democrat today, I'd be shitting my britches. When I was a Democrat, that's what we hated, was the industrial complex and the the war and the bombing and the. Now 99% of my liberal friends are for Palestine. I'm going, what the fuck? There's another $5 into my cookie jar. It's up to 70. We live in a strange country. Magnificent, we nailed it. I'm going to give you an A. A plus. Hey, don't tell nobody, but I'm going to give him a small A and see how he reacts. We'll see what kind of erection we'll get out of him. So far, nothing. It's a non-response. See? We're waiting, Magnificent. Does anybody know what a megaphone is? Have I ever talked about the expansion pattern? I gave you an A plus. He's not even complaining that it's a small letter A. He's just happy to get an A. I used to be like that in school. Oh, please, Lord, give me an A so I can get 5 pieces of bubble gum. Okay, I've got a new song I'm going to share. It's going to cheer us up. Anybody in here like to whistle? Does anybody like to fish? Do you like to fish and whistle?
When you own a Ford, you get the support of a certified tech who services your vehicle.
I've been thinking lately about the people I meet, the car wash on the corner and the hole in the street, the way my ankles hurt with shoes on my feet, and I'm wondering if I'm gonna see tomorrow. Father, forgive us for what we must do. You forgive us, we'll forgive you. We'll forgive each other till we both turn blue. Then we'll whistle and go fishing in heaven. I was in the army, but I never dug a trench. Used to bust my knuckles on a monkey wrench. I go to town and drink, give the girls a pinch, but I don't think they ever even notice me. Father, forgive us for what we must do. You forgive us, we'll forgive you. We'll forgive each other till we both turn blue. Then we'll whistle and go fishing in heaven. Fishing and whistle and fish. Eat everything that you put on your dish. And when we do, we'll make a big wish that we never have to do this again. On the very first job I said thank you and please. They made me scrub a parking lot
Down on my knees.
Then I got fired for being scared of bees, and they only give me 50 cents an hour. Father, forgive us for
What we must do.
You forgive
us, we'll forgive you.
We'll forgive each other
till we both turn blue. Whistling and fishing in the winter. That you put on the dish. Make a big wish. Never give it again. Again. What we must do. You forgive us. We'll forgive you. We'll forgive each other till we both turn blue. Whistling and fishing in heaven. Fishing in heaven. Whistling and fishing in heaven. Oh, the song's over. This is my washboard, folks.
Slow internet was such a trigger for me. But with ultra-fast, bright-speed fiber internet,
Did you like that? Oh. Oh. What was that number you said, Randy? Resistance 50 something? You had 5070. That's what I got. Randy. You love to fish. Did you like that fish, wish on fish song? Anybody ever heard John Prine? That's who that was. I was a good fisherman. I don't think I ever went fishing, never caught a fish. I'd stay until I caught one, always. Don't care what it was. I'll show you my favorite minnow. My favorite, my favorite lure that I always have in my box. We're going to break out to the upside, so hold on your horses. Right there, man. That baby right there. That's the super spot. That's the spot minnow that I like. I can catch white bass with that. I usually tie a line back here on the back treble and put a jig behind it and catch 2 fish at a time. I'll use a hula hopper and do the same thing when I'm fishing for white bass. These things ain't cheap either. Bang, baby. Bank it. Magnificent. We nailed it, buddy. It's a rattle trap. Yep. But that's a different one. That's a special one. I've used all kinds of rattle traps. That one kind of dives down with its nose in the water and floats up at the same time. So YouTube, you understand what we called out here this morning? If you were around this morning, this is how I predicted this here flag. Okay? So that's how I drew this thing out this morning, first thing. This is called an expansion pattern. It's very volatile in a volatile market. We've made some of our biggest money off this here pattern alone because it's got a wider spread, right? Look at it. It's still going down, still going down, still going, and look at this. Still going down. And then we broke out of the snake. Breakout, pulled back, boom. Then we came back down again. Created a double bottom. So then we created a bull flag out of the snake. This is, I'm telling you, you can make a ton of money if you just listen to these 4 steps. Snake, breakout, pullback, boom. Snake, breakout, pullback, boom. It's not always, I mean, it can look prettier than that. Then we developed what you call an expansion pattern. We developed bottoms and we developed tops. That turned into be a bull flag. That's a bull flag. It doesn't look like a bull flag, does it? You say, Jim, how can that be a bull flag going downhill? I don't get it. I don't understand. Any downhill trajectory that goes at an angle will eventually pop up and break out. That's a bull flag. Now, if this was going up, that's a bear flag. It's eventually going to break down and pull back. This case, it's going down and it's going to break out to the upside. And then it's what you get. You get the breakout. So type in nobody will tell you this stuff. They'll just spit out numbers or give you alerts off of some kind of scanner, or they're not going to, I don't know, too many rooms they'll sit here and show you how to chart. Because the only way you're ever going to make it is to learn how to chart. See? Bull flag. So we're sitting down here this morning. Bull flag. This is going to the upside. Bear flag. Continuation to go. Oh, Jim, that's going up. How can you call it a bear flag? Because you count to 3, man, you're going to go down to the hole. You get in something like this, you're a bull flag. If it's going up, you're in a bear flag. But that don't make sense. One thing I've learned about the market, you got to be the devil's advocate. Thing going up, Jim, man, this thing's going up. What do you mean? Okay, go ahead and hold on to it. I'll count to 3 and I'm going to be out of this sucker. I mean, we're coming down and Jim, we're breaking out. I'm telling you, that's a bear flag. We're going to go lower. But I'm up. Well, then take your profit and get the heck out of there before it's too late. It depends on what kind of trade. If it's a swing trade, you can run it up. But there's going to be a point where it's going to break out of that channel and you're going to drop. So that's when you exit as you're going up, if in an uptrend. Once it breaks out of that channel, that's your exit idea. And say you've been in a stock for 4 months and it finally broke out of that channel. That'd probably take profit there. Bear pennant flag. And how would you find a bull pennant flag? You'd be going to the upside instead of going to the downside. If you can count to 3, you can trade with me. 1, 2, 3, I'm out of the trade. Boom. Knife. 4, I'm not going to make any bit more because I already hit my free. That was a sweet spot. 10-4. See, it's coming slacking down. 1, 2, 3, boom. 1, 2, 3, boom. Anything past 4, 5, get out of the trade. Get back to trading. Ooh, magnificent. Woo. 50-60, baby. Always clean this, Jim. Hello? Hello? Hey? Oh, I'm okay.
Insurance program that covers up to 100% of your funeral and burial expenses. Now, to generate the best pricing for your age, how old are you?
Man, 107. Here we go, baby. Randy. God, Lee. Man, this was a great trade today. I mean, I made a ton of money today. Don't tell me you played puts. That's right. I was bullish all day long. I was bullish right from the opening of the bell. And I gave every reason why I was bullish, from the weekly time frame off the 21 SMA to POW to smell and yelling, and there was another indicator in there. God. Expansion pattern, bear flag, bull flag. Look at the SPY. SPX just keeps going. Now I'm mad. Now I'm mad. Now I'm mad. Don't let Jim. Okay, I'm going to teach everybody something new. Amen to that. Relax and let all that tension out. Cool that heart down. Rub your temples and your bottom of your earlobes. Think of how lucky you are. And that some poor guy today is going to get $80 for all the cuss words I said today. Amen to that. Sounds like I need a truck. What the heck is this head and shoulder thing? Why do they hang up on me when I tell them I'm 107? That's your problem. What the heck? They don't even smell good. When they make it so obvious in a bearish look, one has to wonder if they're trying to trap. Hence, it's okay to be bullish, right, Jim? That's right. I remember you writing that down. You know why? You know why? You know why I felt real bullish? It's kind of, I played the devil's advocate with all them idiots on CNBC. They were starting to fear that we were going to get rate hikes. And I'm going, you people, are you stupid? Are you that incompetent? How much more do you want to punish people? I mean, this has went on for 2 years. They don't know ahead from the, I mean, they really don't know. And again, we're 2 steps ahead of them. PRICKS. I mean, I've done well enough today where I don't have to work for a month. Oop. Randy gets deducted a grade for cussing. Yoko, give him a B+. What? Look above. Oh. You caught that. Well, shit. I can't give you an A-. I mean, a small A and a plus. Boom, baby. 2 o'clock, power hour. That's not it. This is ridiculous. What's going on? What's Kathy doing? Kathy Woods? Kathy Woods cheating on me? I'm going to tell you where we are in the market. So we were up here, very extremely greed levels, and we've had 3 weeks of pullback, 3 straight weeks plus a couple, maybe 3 on a sideways pattern. We were at very extremely greedy. I mean, when you got a stock from $300 to $2,000 in a matter of a couple of months, or you got, I mean, I can go over stock after stock after stock where I've never seen a run like I've ever seen before in my whole entire trading career of 20 years. I usually can say we're up here, but we were way up here. I mean, 50 yards past the greed. 50, I mean, maybe 50 miles. We were at extremely greedy levels. Extremely greedy. No one will ever tell you that. I came out and said it. We're still at extremely greedy levels. I can go, but we've pulled back a lot. SMCI. Each one of these represent a week. We had 3 months. I mean, we had this thing a year and a half ago was at $32. It ran all the way to $1,200 on an AI rumor. On extremely overbought. Extremely overbought. And we started pulling back some, so people started getting anxiety. Well, you could hear it on CNBC. That's when I was arguing with them a month ago, when they were pumping the triple tops. I said, no, we're going up. We're going up. No, we're not. We've had a stock that's had a 3,000 point run on it in 3 years. We're not going up. And then we got into denial. They didn't know where we were going to go. Why are we pulling back? Because we were way overbought. Then the fear started kicking in. Then they started saying rate hikes and despair. Then they started panicking before the Fed come out to talk. Because they didn't know. They had no direction. Like they were, before they were lost. And we're now at capitulation. Capitulation. That's where you want to start buying back into the market for a short period on a bear run. Even at capitulation, we're still way overbought. The government spending is going to have to stop. We've printed $18 trillion in 3 years, not counting the budget of $5 trillion a year. That's $8 trillion over the budget, plus the $6 trillion that they printed, and then I think there's a little bit more down there somewhere, but $16 trillion. Not counting all the unfunded liabilities that have been promised out to 12 million illegal immigrants that are getting $15,000 a month apiece for crossing the border illegally. $15,000 a month. Can you imagine? They're paying for the vote. So we're at capitulation. That means we can start being a little bit more bullish. And we'll get a little bit of discouragement on the way. Might get a couple red days. And then we'll start running back up and try to break the double top. But this rebound could happen so fast that we could get back here into optimism again and have to turn around and pull back again. But in my opinion, we're at capitulation. And this is when I called it last year, a couple years ago, when we were at the bottom. I said, get ready, because we're getting ready to turn around. And that was before, 3 weeks before Powell came out and said he was not going to raise rates anymore. And that was at capitulation. That was before he made the speech. And then we run back up and we went to extremely greed level on 6 rate cuts that we're not going to get. So they're changing it now. Oh, if we get 1, that'll be enough. That'll be great to go ahead and break out when we've already priced in 6. That's my opinion. I mean, we could have different opinions, but that's where I think we are right now. And we could have some pretty easily sailing for the next 2 or 3 weeks, because we're not at that extremely greed level mentally, psychologically, where they kept just pumping the market, just kept saying they were going to, and it didn't happen that, we were just up so much. And I just want to make it, people that held on, I'm sorry, but I pre-warned you. I said, hey, I'm not buying and I'm not swinging at these high levels of extremely irrational exuberance. And if Greenspan was alive today, he would have gave a speech. Because I saw it during the .com era, when AOL and Wahoo and all that, there was like maybe 300 internet services that came out, and only 3 or 4 survived. But they all ran like a Dickens. I mean, Wahoo Finance went from 30 something all the way to $600. I forgot where AOL went, and there was a couple others. There was one called not Match, but it was an internet music website, kind of like Facebook. When Facebook came out, My Page, no, something about for musicians. I used to get on there a lot, but there's a lot of them, and only a few survived. But they, just like the Bitcoin, we had 0.002 cents for a coin that run all the way up to $5. BTC something, there was a bunch of them. We traded them like the Dickens. We were bumping these penny stocks, 0.001, 0.009, and running them up 50 cents every single day. And then you got the AI for the big fat cats. Now they finally made some money. It took them a while, but they made more money in the last year and a half than they have their whole entire career on this last bounce in 6, 8 months, 9 months, ever since October. So we're down here in capitulation, and we're going to get a lot of discussion out of the Powell speech, and whatever little bit of morsel good news that they can pinch out of it, because we're in such a greedy, irrational market. And I've never seen the traders on CNBC. I've sat and watched them for 20 years. I never got so upset with them in my entire life in this last run. I could sit here and listen to them and smile, but to listen to their lies, it's like, when Josh was pumping Uber at 80, or Stephanie was pumping Nvidia at at the all-time high saying we were going to go up to 1250. I'm going, what? Josh pumping this stock at 80 bucks. What pissed me really off. And it still can drop more. It can still drop a lot more. If you look at the yearly chart, we have pulled back quite a bit. This was at 20 bucks, and it's up 400% in a year and a half. That's up way too much. It's up way too much. I don't care what numbers come out of this box. This thing can drop all the way back down here to 43 bucks. It's up way too much. 400%. And I got to keep that in mind because I ain't going to sit here and hope for the moon. You get NVIDIA at 108 all the way up to 900 bucks, 800% run in a year and a half. I've never seen that in my entire life. You're lucky to get 30 or 40% in a year. This is up 800%, 900% in a year and a half. I ain't falling for it. This thing's going to drop back down to 5. I'm just going to, that's just the way it is. I'm not going to be pumping this stock to 1250. I just ain't going to do it. I have a real good feeling this thing's going to pull back. Way overbought. But NVIDIA is the best trade right now to go on. I mean, we could trade this every single day. Out of a snake, you got snake, breakout, pull back, boom, double top, you're out of the trade. Simple as that. And snake, breakout, snake, breakout, snake, breakout to the moving averages, snake, breakout into a symmetrical flag off the 200. It becomes bullish now off the 200. Boom. So I called this one out today. AMD. Let's look at AMD. It did pull back, and I called it out. So remove this. I mean, this could be a bear trap because we landed on such a solid support on the SPY. I mean, it's just undeniable. Those, 3 black crows with a harmony. And now you've got what you got here. You got a hammer, which means you got a head and shoulders. If you pull this up on the yearly, we're still under the 50, so we're still bearish. We're still very bearish. This thing, I'm telling you, this thing can come back down and hit the 200. We got 2 wars going on. We just spent another $360 million and bringing guns to an island that's just, to a pier that's just off of Pakistan. So what happens if one of our soldiers gets shot? They're going to send 1,000 troops over there to do something stupid, to get involved in this war. And that was today. So I got to keep that in my back head when I'm trading, and that still puts me in a bear market. As long as we're under this 50, we're still bearish, and we can drop back down easily. This could just be this is a perfect play. It was a perfect setup. I couldn't ask for a better setup. And I've been talking 3 black crows forever and showing you how to trade them. And when you come in with a Harmony, which is an inside candle, that's very bullish. And you're going to get a good bounce up to the upside. So I come in here this morning knowing that. And we've been waiting for 3-4 weeks to hear what Powell was going to say. So today was the big day to get, and then Wall Street's going to decipher whatever he says and turn it into a positive. Because they don't want it. Magnificent said it, and I'll say it again. It's an election year. And we're in a coup. More or less martial law. We got a president that can't talk. We got Hillary and Joe Biden running the country. And all of our institutions are run by Democrats. Most of them. All the CEOs are Democrats. So that's what we got going on. If you can name one CEO that is a Republican, there's probably a few out there. I don't know of any. Musk turned independent. Joe Walsh is gone. I can't think of too many more. Carl Icahn, probably. And Jamie Dimon's starting to become conservative. He was a big liberal. So I mean, it's just my philosophy on how I trade stocks. I just don't want people getting caught in this extremely greedy market. Extremely high. Extremely greedy. And if you're not cautious and really on your toes, you know, it can get real bad. Just because we had a good day today doesn't mean we're going to have a good day tomorrow. Because we're so high. We're up so much. And the printing's going to stop. And then they're not going to have no more money. That's what these guys are wanting. They want that money. What's this now? He's now blocked me. He couldn't stand me saying that the Powell market could be pumped. Who's blocked you? Continues to obtuse for me. Oh, what's this here? Pop out. What I missed? Did I miss a lot of good action in here while I went on a rant? Bear's not angry at me, for real, dumping the market. Oh shit, here we are at the 200, folks. Magnificent? Do you want a grade? That might be a good thing. Okay, well, I've got a song that I'm going to play. Jen, I'm going to put this one for you. Are you listening? Jen? You ready? Just imagine you and I kind of sitting in the middle of the dance floor, and you look at me and you say, what's a good, easy, slow dancing song that we could dance to? And I'd play this.
Are you driving way less than you used to? Do you have a clean driving record?
No, I have a horrible driving record.
Do you not have a...
Well, I'm tired and so weary, but I must go along till the Lord comes and calls me away. And the morning's a bright, and the land's alive, and the night is as black as the sea. Oh
yeah.
There will be
Peace in the valley for me, I pray.
There will be
Peace in the valley for me.
Well, the bear will
Now we bounce off the 200 SMA. Let's ride it up to a triple top.
and the beast from the wild will be led by a child, and I'll be changed from this creature that I am.
Oh yeah. The valley for me.
There will be peace in the
Valley for me off the 200 SMA. We're gonna run it up to a triple top.
There will be
peace in the valley Oh, yeah. Let's blank it. Let's blank it. It's called Peace in the Valley by Johnny Cash. Ain't you ever heard Peace in the Valley before? Spank. I got a new girlfriend in town. My old girlfriend finally came back to see me. Drink water. Dang, damn it, we're back down here again. Okay, let's see if the snake's going to work. Let's draw the snake in. Now, I'm going to give you two examples here. This is a fast sell-off, so there's not much building around it. If you can count to 3, you can trade with me. So we've got the snake, the breakout. That's caught my attention, but we're not totally broke out yet. There's still a little bit of body in that candle, so I'm not ready yet. Then we come out with 3 white soldiers out of the break, and we come back and retest. Now, this is the critical point right here where it's got to bounce to the upside. So let's look at the calls. The 505 strike at 125. We're at 132. I'm telling you, this is it. This is a sweet spot. If you're not in the trade, wait for a flag. Wait for the flag. We ain't seen the flag yet. We gotta wait for it to come up here and then take the trade if it breaks this trend line. That or you take a risk and you buy them now at 110, 109 and hope it holds. But that's risky because we're not moving up yet. We got to move up. We got to move this thing up so that, you know, we wait. Here's the expansion. Watch this. Watch this. There's the expansion. There's the 1, 2, 3. Now watch it go up to the upside. 1, 2, 3. I'm in the trade at 110. 110. 1, 2, 3. 1, 2, 3. Boom. That dropped on me. Uh-oh. Uh-oh. I'm in trouble now. Shit. There's another cookie jar. Oh, man. Okay, so we can drop down here. Heck. Gosh, I don't like this. I don't like it. Well. 3 black crows. I'm going to add right here. Three black crows and Jimmy's in trouble. Okay, I got 110 and 73. Friday, I need 91.50. We got a hammer, which is bullish on the 3 black crow. Oh, I'm on SPY. I'm trading SPY. Dip. I haven't done this in a while. Okay, I'm in trouble now. I bought the SPY. Why did I do that? Okay. Funny. I said the SPY. I don't know what I said. I was looking at the SPX chart. It's time to stop trading. Today. Got an average of 92, and I don't think I should get out because we can drop down here. Anybody take his trade with me? Oh, we got 5 minutes to go. Oh, God. You're right, Yoko. You are right. Dadgummit. I really screwed up. I'm going to get out of this trade. I screwed up. He's right. Yoko, I did not look at the time. I didn't even think about it. Wow. I hope I'm allowed one mistake. Come on, break out. I got to get 92. Dadgum you, Jim. Don't ever do what I just did, YouTube. Take a trade like 7, 8 minutes before the bell. 10 minutes before the bell. It's not a smart thing to do. Chalk one up for the Bobo. Well, how you been? Even the good people can make mistakes. I don't think I have a chance. I mean, people are pretty pooped out today and made a lot of money. Lucky for me, I did well today, you know. Come on, give me 70. Hike. Yeah, that was a bad call. Okay, bye-bye. $40 to $30? Are you serious? Ocean, why didn't you tell me what I was doing there? Okay, well that was a trader's mistake if I ever did one. I didn't even think about the time of the day, and I jumped in this trade like it was in the noon. So power hour, you got to trade totally different. You know, risk on. So that was a big blooper right there. Remember, don't ever do that. I've traded stocks, and I'd be wanting to buy the SPY, and I buy the SPX, or I'm looking at the SPX chart, and I end up buying the SPY, and I'm going, I'd rather be looking at the SPY and buy the SPX, because then I can measure the VWAP. So today I was very bullish. I had many reasons to be bullish today. I had many reasons to be bearish for 3 months. This is the SPY. This is the weekly time frame. Each one of these candles represented a sell-off, 3 black crows. And we landed on the 21 SMA. And for 3 weeks, we've been riding that 21 SMA. As long as we hold the 21 SMA, we're still good in the market. If we even start to drop below that 21 SMA, we could easily drop down to the 63 or the 51, even the 63. Let's look at the 63. So we drop down to the 50 SMA. Let me put that on here. And then go back to the other one. Now I'm comparing the 50 SMA moving average on the weekly to the 63. So we got this previous top. Get the top of the wick at 480.55. So I've got my 3 supports. I got the 21, I've got the 480.55, and I've got the 464 off the 63. That'd be a lower support. We want it to hold the double top. See, double top. And then a week later, 2 weeks later, it broke a triple top. So this is 1, 2, and 3, each one of these representing a weak candle. So support naturally would be the triple top, which was the old resistance. So if we have a fake out, which I think we will have, because we're just overbought, man. I can't. Way overbought. But today I was bullish for one major reason, 2 major reasons. It's because we got your 3 black crows, and then we got a harmony candle. This is a very bullish candlestick leading into this week. So if you look at the 5-day, 5-minute, and decipher that out, today's Wednesday. Today was the POW speech. So we held that support, that 497, 500. That I pointed out first thing this morning, and I got that from the pre-market low. You see where I'm coming from? If we would have breached that pre-market low, we would have went ahead and had a nosedive today. The fact that we're back down here again is just stating they're going to siphon out the news. The fat cats are, and they're going to try to find anything in there that can be positive. And they're going to turn that little bitty increment and they're going to move it into like earnings. Or they're going to move it into we're going to wait for the next CPI or the PPI to prove what Pow said today. So they're going to decipher that out. And that's we're still pending if we're going to have a breakout or not. But I don't think we are. I think we're in a bear trap. Because we're just up way too damn much. But I'm fighting against the fat cats. We're just up way too much. Still. But as long as we're at that 21 SMA, we got to keep playing that 21 SMA until we break loose of it. And we could hit that many a times and come back, hit it again, hit it again, hit it again, until they get tired of it. For right now, we've hit it 3 weeks in a row. And we had a very bullish breakout. We had, perfect. Very bullish. When you have a harmony candlestick pattern, that's very bullish. So where's the next resistance, Jim? I pointed it out yesterday. Does anybody know where I pointed out the next resistance yesterday? Does anybody remember? It was the body of this candle right here, right? So we're going to draw a line on the body of that candle. And I want to show you something. I pointed this out. We're going to take it and put it on the body of the candle. Wow, what happened? It was real simple. Real simple to find that resistance. Each one of these, I don't care about the wick. The wicks don't tell me nothing, but tell me what direction the stock's going to go. The body is where all the nonsense is where you got to really pay attention. The wick is a gift. I'll use it for wherever I got it, that's my final resistance. So let's pull this up on a daily 1 minute. Do you think we come close to that 510.70 today? Do you think we might have nailed that 510.70 today? Not yet. Not yet. So we're still bearish. We just had a reaction to the Powell speech because we've been selling off so hard. We were at 525 and we dipped all the way down to 492. That's not much. That ain't really that bad. We did break below support. We did break below support, looking at the hour time frame. So for us to become real bullish on the 1 hour, we got to break the 200 SMA. The 200 SMA is a pivot point. Resistance, resistance. We broke it, support, resistance. And then we broke it again. And we got to get back up there. And we've pulled back down. So we broke the 200. And that could be a sign that we're going to go ahead and break it on up and come up to a double top and get back at that weekly high and hit that resistance. There it is right there. See it? See that? We hit it. We hit it on Monday. We hit that resistance at 510.70 on that weekly candle on Monday. Perfect. To the penny. And that's that body of that candle. So we break past 510.70 next week or this week. I don't think we can do it, but if we do, your next resistance is going to be the body of this candle, which has an equilibrium to this candle. And you'll put your resistance line on that gap. So somewhere in off this one here. At 514, and that's your force field. So if you get close to it, you get out of it. If it breaks it, you sell it at a little bit above. As long as we stay above this head and shoulders, We come back down and touch this shoulder line. You got your left shoulder, head. We break out of it, and we come back and retest, and that's when I would take the trade to go up to the top. If we double top, come back and retest the 200, and then take it up to the top. Everything retest. Like here. Break out, pull back, retest. Break out, pull back, retest. 1, 2, 3, boom. Snake. Inverse head and shoulders. Break out. So that's it. I want everybody to get along in the room and have fun. And we all have different. We can get offended real easy. Some of us can. Some of us can't. Some of us can throw the hard balls and so just kind of be sensitive to everybody's feelings when you're dealing with money, and some people are having a hard time trying to figure it out, where I'm trying to make it as simple as could be. And some are. So I'm not the smartest cookie in the shed. I can barely spell. But I'm real good with numbers, and I'm real good with common sense and street smarts. So there's a little part of everybody that you can take and you can learn, and it could help you become a better trader. Some of your best instincts. Just for example, we're talking about fishing today. I got a tackle box. And in my tackle box, I got my favorite lure. When I'm trading charts, I got my favorite tool, which is the snake. Break out, pull back, boom. I know I can always win on that trade. Almost always. So everybody's got to have a tackle box. And everybody's got to have a certain tool that they really like. If it's the Bollinger Bands, if it's the Ikamuko Cloud or whatever you call it. Mine is chart patterns and moving averages. If I didn't have the moving averages, they work as resistance lines. They work as support lines. I don't have to draw. I don't have to put a line on this chart. I can just clear it up. I can just clear this thing up. And I used to tell Vegas when I was, or any room that I was in, I could take a trade just off the 200. Now I can take a trade just off the 63. Put. We didn't break it, so I'm going to get in the put. We broke it, so I'm going to buy the call. We broke it down, I'm going to get in the put. We broke up, I'm going to get in the call. We broke down, I'm going to get in the put. We break it past it and hold up above it, I'm going to get in the call. I really like this 63. I used to dribble about the 51. Everybody that knew me when I first started in here, that 51, man, that's killer. That thing works perfect. That 51, man, Jim, I found a gold mine here. And then someone this week was thinking about it, sat on it for 3 or 4 weeks and said, what the heck? I'm going to use the 9 over the 21 crossover and buy puts. Simple. I don't need a line. I don't need to do nothing to this chart. All I got to do is look at that 9. And when that 9 crosses down below that 21, I'm going to buy put. And you can do that on any time frame. 1 hour. 9 crosses over the 21, and then you stay under the 9. I'm in the put all day long. I don't need any trend lines. I don't need a Bollinger Band. I don't need a VWAP. I don't need nothing. As long as I'm above the 9, I'm still in the trade forever. until we break below it, then I'm get out. So I'm buying these crossovers. It's called an alligator chart. This represents an alligator chart. I'm going to show you what an alligator chart is. I mean, I've traded a lot of different strategies. I can trade about anything. I want to see what that sandwich pattern is. I forgot what that was. So this is called an alligator chart. You got these different moving averages on here. When the crocodile alligator opens up his mouth and the bands expand, you get a breakout. When they start to squeeze and the bars start to expand on the downtrend, you get a sell-off. It's real simple, real easy. These are all set up. This is the jaw length of 13. The teeth length are 8. The lips are 5. The jaw displace is -8. The teeth displace is a -5. And the lips displace is a -3. I don't understand any of that. All I understand is when the green line crosses over the blue one, I'm going to be in this trade, and as long as I hold that green line up, I'm going to stay in it. And when the green line crosses the blue to the upside and the jaws open up, I'm going to stay in that trade until they start to tighten up, then I'm going to get out. That's called the Williams alligator. And then we got one in here called sandwich. I want to see what that was. I forgot what that was. Maybe it's... there ain't nothing there. Never mind. That's funny. So, to me, I think I've called this market pretty good, especially in the past 3 or 4 weeks when we've been on that 21 SMA. And that's all you really had to worry about off the 3 black crows. So we'll see what happens tomorrow. Now, this is Wall Street's going to digest the news. As long as we stay above 500, we're still in the game. If we go below 500, then we're not in the game no more. 500 is the major number. Same as the 5,000 on the SPX. If I remember right, that's what they were calling out to break. So each one of them numbers becomes solid support. That's it. I hope I don't confuse anybody. Sometimes I get a little carried away and get on a rant. Just ignore me. Because it's really something good to listen to. Because it's about how being in the now. If you like it or not. I'm helping another room out. And I've alerted them all the SPY at the bottom. None of them didn't want to take the trade. I don't think any of them knew where we were at the 21 SMA and didn't pay any attention to it. Because I alerted the room. I said, weeks in advance. And so I'm hitting here calling this trade out at the very bottom. And they're going, I ain't taking that trade. I ain't waiting. I'm waiting for Powell. I'm waiting for him. You know, I don't want to. They don't know that 500 is a key level point. They don't know that we were on that 21. They didn't know that. They didn't know how important that support was. I'm going to clean this up. They didn't know. I knew it. I tried to teach them all about expansion patterns. They never heard of expansion patterns. Tweezer tops, double tops, triple bottoms, inverse head and shoulder. One guy, is inverse head and shoulders, ain't that bullish? I mean bearish? No. The head and shoulders is bearish. And you're at the top. And inverse is one of the best chart patterns that you could trade. They show up every day. The inverse head and shoulders. You could trade, that's all you got to know. It's just that one. The triple top, the tweezers, and the double tops, and get out at the 200 SMA. So, I guess I'm going to go ahead and get out of here. And we'll catch you all later. Thanks a lot. And we'll see if I can end with a good song here. I'm going to pick one out of somebody that I know. People that I played music with. Whoops.
Medicare. What if I'm still working? Where do I start? Get your questions answered at Medicare.gov, paid for by the U.S. Department of Health and Human Services.
Gentle, getting gone, keep me cold, getting gone. Was a snake, sneaky snake, sneaky snake, sneaky snake, sneaky snake. Jeff N. Vita. We'll catch y'all later. Bye-bye.